Good morning, Talre Vivo, Dolphin Frozen Foods, located in Temas, Yaco.
And so I would say we've gathered here today just to create a platform for us to be able to network among ourselves and then learn from the experts on the field, look at the various opportunities that the topic comes with, and the challenges and how we can navigate them. The main topic has been the appreciation of the Cedi and the challenges as well as the opportunity that comes with it. And so as we try to bring on stage the various experts to give us the insights on the macro level, on the business level, and even on the bank level, how we can also offer advice to support, I would crave your indulgence to sort of engage so you'll be able to get the maximum of the benefits that the program will have to offer. And so I would ask that you note down, we've provided pens and notepads on our tables. You note down any question at all that you may have. So you will give it to the facilitator to address it when we get to the question and answer session. This is the main reason why we are here today. As a way of program outline, we would look at first the banking products that we do have as a bank to facilitate your business operation, the various products and services that we sort of make available for businesses such as yourself to help you make your various payments across the world, make your payments within the country, and also support whatever financial requests that you may need to help you improve on your operation. And then we would also, but of course, pardon me, our first program will be for our managing director to give the opening remark to welcome you, and then our the head of transaction banking will give the products and services that you need as businesses to go on. And then we will have a talk from the CEO of AGI, who would have a talk around the business strategies around the Cedi environment or strong Cedi environment, the business strategies you need to improve on your operations. He'll take us through that discussion. And following that will be Professor Bokwin, who will come in to deliver a lecture on the understanding of the various drivers of the Cedi appreciation and how we can take advantage of the situation. That will be the first part or the part one of the discussion. And once that is done, we'll have just about 5 minutes break to stretch our legs. Then we'll come back to do, so that's why I indicated you note down your questions, because that session will be question and answers. And at that point, all that the facilitators will do is to listen to you and then provide answers to the questions that you have based on the lectures that they have given. And so that will run for about 40 or so minutes. And once that one is done, we would have our lunch and go and continue our businesses. Whilst we sort of begin, I'll just check with the tech team if we are ready to go live. But our first program discussion will be from our head of digital transaction banking department, who will give us some products and services, the digital ones we need, the trade ones we need to help us improve on our operation. Thank you.
Good morning, everyone. My name is Ibrahim Mohammed. I'm the head of transactional banking. This morning, just by way of breaking their ice for the main speakers to come on board, we would like to take you through our products and services that the bank has developed to support your various transactions. As a bank, we understand that as business people, your main pain point in driving your businesses is number one, how to collect your receivables after selling your products. And secondly, how to make various payments both domestically and internationally to for your supplies and to your vendors. As a bank, we have various products and services to support you in that regard. Depending on the dynamics of your business and your transaction dynamics, we tailor-made a solution to meet those specific needs of your business. For example, we have solutions or products for customers in all categories of businesses. In the industry, for example, OMCs, oil industry, filling stations, supermarkets, as well as wholesalers. We, as a bank, have a point of sales terminals which are tailor-made to be deployed in your stations to be able to collect and attend to your customers and meet their needs and expectations. And I can assure you that our POS, that is point of sales terminals, are one of the best on the market. Simple that we are able to tailor-made that to meet your business needs. And secondly, we are among the banks in the industry whose POSs accept both dollars and cedis. What it means is that if your business is to accept dollar, we are able to provide you a POS that would meet those specific needs. And then for people who also want us to reach out to them in terms of collecting physical cash, we also have other solutions that we are able to tailor-made to meet those demands. For example, if you are running a cold store in Tema, and then you needed a solution where the bank can be present to manage your receivables, manage your stocking levels, PBL, we are able to do that as a bank. And then whatever it is at the end of the day, the reconciliation is done and you see everything intact in your bank account. Aside from that, the bank is also able to provide you a USSD solution, which allows you to also collect your receivables at any point in time, depending on the needs of your customers. We're doing all this because the market is evolving and moving. The physical cash transactions is basically declining. And as business people, you need to provide convenience for your customers. And as partners in these businesses, we ensure that we provide you with those solutions. So when you come to payments, as earlier mentioned, our payments, we have both domestic and international payments. In terms of domestic payments, we have vendor payments and supplier payments. In addition to that, you also have salary and other payments as well. Our online channel or solution allows you to make varied payments to your customers. I.e., for example, if you were making payments to a group of people, say hundreds and thousands, our channel allows you to be able to do batch payments. And it also allows you to make payments to both mobile money holders and bank account holders at a go. So what it means is that all you need to do is to load the file, and then you are able to self-validate. So you don't just load it and run. Before you even run the file, the platform allows you to self-validate to ensure that all the beneficiary details are intact before you run the file, before you release the payments to the beneficiaries. One other key function that this payment channel provides is that it allows you as managers and business people who are very busy with their day-to-day activities to be able to make post-dated payments. For example, you want to make payments, maybe salary or vendor payments at the end of the month. You are traveling outside, you are busy. You have other engagements that if you are not careful, the time will come, you might not remember to do such transactions. So from the word go, you can decide that you load the file, then you authorize, and then you give a specific date when you want the payment to go through. That is the kind of platform that we have. And it is very important that as business people, we partner with you to make your life much convenient. I'm quite aware that most of us here are already on those platforms. And for those who are not on those platforms, I would encourage that before close of this program, we should be able to onboard you onto that platform. Now, apart from online payment, Prudential Bank has also integrated directly to GIPS. So what it means is that we are able to make payments, NRT payments, and all the other payments that you can do to get instant value. Because once you do GIP transaction in our banking halls or on our platform, the beneficiary get instant results. And I'm sure that is what, as business people, that we are all yearning for. Now, when you come to international payments, i.e. trade payments, SWIFT transfers, it is very important that we make it clear that one of the basic challenges that we have is how to make payment to our external suppliers. And I think it's very critical to most of the importers that we have here. And as a bank, we are I see all the customers. So as a bank, we are connected. We are partnered with key correspondent banking. We have key partnership with correspondent banks, i.e., we have partnership with Citibank. Citibank is the bank that does our third-party payments. And you can imagine when you are doing dollar transaction and you want it to hit the beneficiary's account as soon as possible. It is very important that when we do it for you, because of our partnership with Citibank, the transaction goes direct to Citi, and then they in turn move it to your bank. You are not going to pass through any European bank before passing the transaction to the beneficiary. You go straight to Citi, because Citi is the only bank that has the mandate to direct dollar payments. The banks in the US, we have Barclays, New York, Bank of New York and all that, they are all able to direct dollar payment. But Citi Direct, we have what we call Citi Direct. It allows you to do instant payment. And once those transactions are passed through them, it is very easy for the beneficiary to receive the funds immediately. Now, we are also aware that as part of your demands and your requirements is to make payments under various trade finance payment models, i.e., most of us here, we transact under documentary collections, others transact under letters of credit, open accounts, and so forth. And for all those mode of payments, it is very important for you to have a very strong corresponding bank. And I can assure you that as a bank, our corresponding banking relationship with our partners is very solid, and it is very easy for us to pass payments through them. As products that we sell to our customers, and products most of you are already enjoying, you realize that some of them are tailor-made towards your needs and the needs of the supplier. And that is why when you come to us, or when we come to you, we try to better understand your business dynamics. And sometimes, as part of our advisory, if you have to engage the supplier, we do that on your behalf to better understand their key requirements, just so that we protect you as customers to ensure that nothing untoward happens with your dealings with the customer, with your supplier. So these are the kind of things that we do. And all of this combined, it boils to one thing: speed. Speed is what business people want. Because I know that all of us here, we engage in one mode of payment or another. So it's not for me to tell you that documentary collection is this, and that. These are things that we already know. But I know that your main pinpoint here is speed. And speed is what our guiding principle as a bank is. It is very important for us to make it clear. There are situations where transactions delay, not because there are issues coming from the bank, but sometimes the kind of information that we receive from customers sometimes may delay the process. For example, one of the things that Bank of Ghana tries to help business people and importers to manage the FX situation is Bank of Ghana FX option. Now, most of our customers, including you yourselves, you come to the bank most often to apply for us to move to Bank of Ghana to bid for the auction for you, for your payments. But sometimes what we realize is that the requirements that you're supposed to go through or to meet, or the documentation to provide for us to be able to bid on your behalf, is very so the documentation required for us to be able to bid and to win the bid for you has always been a challenge. So then you have to be going back and forth. Sometimes it is not because we haven't shared the information with you, our customers, but maybe because of the documents that you receive from the clearing agents. So as much as possible, I want to make certain things clear here based on the documentation that we require to be able to do that. Just so that when you are putting together your documents for us to bid for you, you'll be able to get it right. Number one, so before you qualify to apply for this auction, number one, you need to provide a request. A written request from you as a customer is very important. There are certain documentation required. So you must write, give us a written request as part of the documentation. Number two, you also have to provide a consignment document. A consignment document, we know, is the same as IDF. We all know it as IDF. It's very important. Bank of Ghana requires that as part of the documentation for the auction. And then, bill of entry is very important. The BOE is a key requirement for the auction as required by the central bank. You must also provide original way bill or bill of lading for us to be able to send the request. And then you provide final commercial invoice. Commercial invoice is very key. There are situations where customers will provide pro forma invoice. Pro forma invoice will not qualify you to be able to win the bid. The commercial invoice tells Bank of Ghana that you have the goods already here, so you have the documents, and then you want to pay for them. Pro forma means you are still sourcing for the goods. You can only use pro forma when you are sourcing for the goods, but you cannot use pro forma when you are making final payment to your supplier. And then the last document that you need to provide is the packing list. Packing list is very important. It describes the caliber of goods that you have in the container or in the ship, in the vessel. It's very important. So if you put all these documents together, then our treasury team would then submit the bid to Bank of Ghana. And then Bank of Ghana, they will then look at it, consider, and then as and when they come to the market, they supply you with the dollars. And I also want to reiterate the fact that there's no way Bank of Ghana will give you any dollars above the invoice amount. But they can decide to give you an amount less than that. Because you cannot pay above your invoice amount, you can only pay below that. And it's very important for us to know. I'm saying this because sometimes we have situations where customers complain that their invoice amount is 500,000, but Bank of Ghana is giving them 200,000. And some will have commercial invoice of 100,000, and they'll be applying for 200,000. This will not meet the requirement. And it's very, very important that we know. So for customers under documentary collections where the bank has already received the documents on behalf of the customer from the remitting bank. So once we have the documents already, it has a lot of information that we can go to Bank of Ghana with. But you need to also give us a request. It's very important. So once the request is given, we attach it to the documents that we have, and then we bid on your behalf. We send it to Central Bank to bid on your behalf. So these are the key requirements that I just want to highlight, just so that when we are doing bidding for auction, we ensure that we comply with this regulatory requirement. And Bank of Ghana auction is just to supplement your FX requirement. And it's very important for us to understand that these days they are on the market almost all the time. So even though you might not get your parts, but they know that customers with multiple banks, they know where if they give you in one bank, they know that they may be in another bank where you also applied, they might not give you because they know. They have the system to track all that. So it's very important for you to know that. So that is the bit of the auction. And in the past, the central bank used to give the dollars directly to the banks, just so that they will give out to customers. But they've changed their way of doing things now. So they would rather give it to the customers directly. And the key requirement is that if you submit a particular document for the bid, and then you've won, you cannot use the FX that the Bank of Ghana will provide for a different payment. You must use it for the particular invoice that you use for the bidding. This is very important, because at the end of the day, when the transfer is done, we as a bank would have to submit returns to Bank of Ghana to let them know that, look, the FX that you give to this particular customer is being used for the intended purpose. It's very important, because we have situations where a customer will give you a document to bid. The bid is won, and then he wants you to use it for a different payment. It becomes a challenge. So I just want to say that this directive is from the regulator. It's not from the bank. just so that you know. Be sure the document you want to pay when you are doing the bidding, and then you use those same documents to apply for the auction. Now, as part of the payment landscape, the Afrexim, in conjunction with the central banks of Africa, also came up with a payment platform called PAPS. PAPS means Pan-African Payment and Settlement System. Now, PAPS is meant to facilitate payments within the continent of Africa, and it came as a result of the setup of AFCA, Africa Intercontinental Free Trade Area. The idea of setting up that AFCA is to facilitate trade transactions within the African continent. But you see, you cannot set up AFCA if you don't have a conduit to facilitate payment, because everything about trade finance is payments. Whatever instrument that you establish for your trade transactions, at the end of the day, you have to retire it. And whether you are doing it through documentary collections, LCs, open account, or whatever, you have to pay. Now, for them to be able to facilitate trade within a continent, AFCA was set up by the AU, and then Afrexim then came out with PAPS in conjunction with AFCA AU, and in collaboration with all the central banks in the continent. Now, the idea is that we have businesses that trade among themselves within the continent. And this is very important. As a continent, we promote our own. And it's the reason why the PAPS PAPS payment platform came about. Now, initially when it came, all that it does was that now the system only allows payments from $1 to $10,000, just to the minimum. So what it means is that, and payment using PAPS are all done in local currency. So what it means is that you have a transaction in Nigeria, for example, you want to pay for hotel, you want to pay for some few goods, you want to pay for personal effects. What you do is that you just send a request to the bank that you want to pay 5,000 Naira to a particular hotel or supplier in Nigeria. And then the bank will debit your account with a Cedi equivalent of the Naira, and then the beneficiary in Nigeria will also receive their money in Naira. And it's very simple. There's no room for you to now go to the bank to negotiate for dollars. There's no any correspondent banking engagement where you will say you've sent a transfer, it's delaying, it's not gone. The PAPS runs on GIP. GIP is very fast. Now, it's very fast and instant. You can make a payment within 10 minutes. The beneficiary receives it at the other side in Nigeria. And it's very important. So when this one came, Afrexim realized that, look, the cap for the payments was very low. $10,000 was too low for business transactions. Now they came out with another platform called PAPS Marketplace. They realized that we have one business running in 5-6 countries in Africa. For example, if you take Kenya Airways, for example, they are almost everywhere. Dangote is everywhere. We have Kasepreku in Ghana, they are in Nigeria, they are in other countries. So they realized that for us to be able to allow businesses or support businesses to be able to expand and grow in other markets within the continent, it is important for Afrexim to come out with a product to allow customers or companies in other countries to be able to move their proceeds either back home or to other countries in Africa for expansion. So they came out with this product called PAPS Marketplace. Now, PAPS Marketplace allows you as a business in Ghana to be able to match and exchange a currency in Nigeria. For example, you have $10,000. You you have 10,000 naira in Nigeria, and you want Cedi. You understand? Or you have your money in Nigeria, you want it home. So the system works in such a way that the platform is a platform. It's a very defined and recognized platform by the central banks in Africa. So they are aware. It's not like a backdoor transaction sort of. So what happens is that if you want 10 million naira and you have the Cedi here, you walk to us in Prudential Bank, you tell us that, look, I want 10 naira in Nigeria, but I have the Cedi in Ghana. I don't need to transfer. How do I send it? Now, what you do simply is that you write a request to us defining or describing the transaction that you want us to do. And then simply, the PAPS marketplace has an account with all partner banks. In fact, in Ghana, we are one of the banks that has already hooked to that platform. So you write to us. The simple thing you do is to move your Cedi equivalent of the amount you need in Nigeria or the naira, into the PAPS marketplace account, domicile with Prudential Bank. Now, when that happens, the next thing for you to do for the platform now, because once you move it in, it means that transaction activities commences. Now, on the platform, we also have customers in Nigeria who want Cedi in Ghana. So the players on the platform then will transact. And then you will match currencies and agree on the rates. Once the rates are agreed, immediately your account in Nigeria is credited with the naira, and then your Cedi in Ghana is also credited to the customer who is here and giving you the naira in Nigeria. There's no conversion rate in terms of FX. There's no transfer that takes place. All transactions and movements are internal. So you just move from one account to another. And the same also happens at the other side. So this is very simple. And we find businesses using this marketplace to transact within Africa. So I'm just bringing this to speed because we have customers with transactions within the continent. They have businesses, they have partners in other places in Africa. So it is important that when you know about this product, you should be able to engage them and let them know that they don't need to go to the banking hall to transfer. They can easily play on this market platform, just so that nobody asks you for any documentation. There's no document required, nothing. You don't need to show any document. And this is an approved transaction by central banks. You have your currency. The person also has his currency in the cash and the currency that you both require. Yes. So I think without much ado, I will end my presentation here, just so that other presenters would continue. Thank you very much.
Thank you very much, Zibu. The discussion will continue during lunch, where we would have more time to engage, even one-on-one, to have specific products that would apply to your businesses. Ladies and gentlemen, at this point, I want to invite our chairman of the program, our co-host or the chief host of the program, to give us our opening remark. Please, let's welcome our managing director, Mr. Bernard JB.
Thank you very much. It will be a brief speech because we want to listen to the experts who are here to talk to us. Our esteemed CEOs, CFOs, and executives of business, our distinguished customers, members of the media, my fellow Prudential executive and staff, ladies and gentlemen, I will now formally like to welcome you to this critical discussion on the appreciation of the Ghana Cedi in 2025. I know it's been very topical and divergent views have been expressed by it. As the Managing Director of Prudential Bank, I'm honored to address such a gathering that is full of people who are committed to navigating the complexities of the current economic landscape we find ourselves in as a country. The appreciation of the Ghana Cedi presents both opportunities and challenges for businesses. Opportunities for those who are importers, and sometimes some challenges for those who are exporters. We've had divergent views on that. A stable currency, as we've witnessed in the past few months, also presents opportunities that most of us will need to align with, irrespective of the business that we do. Our team of experts that we've brought here today, some internal and the external ones, have closely been monitoring the situation, and we as Prudential Bank are committed to providing you with the support and guidance you need to thrive in this environment. This is one of the reasons why we've gathered here today. At Prudential Bank, we have a deep understanding of the Ghanaian economy. We're here. We've been with you since the beginning of time. Our team is dedicated to providing innovative financial solutions that meet your needs and to help you achieve your business goals. Whether it's through our trade finance services, foreign exchange solutions, or other banking products, as has been explained by Zebrim, we are here to support your business and to help you navigate the complexities of this current economic landscape. Our bank has been a long-standing partner to a few of your organizations, most of you here, long-standing partners. And we are proud to have played a role in supporting your growth and development. We have with us here today, as I said at the beginning, a panel of experts who will share their insights on the outlook and the impact of the Ghanaian Cedi appreciation on your businesses. We also provide a platform for discussion and networking, allowing you to share your experiences and best practices with your peers. We are here to hear the experts speak, so I won't waste too much of your time. And of course, provide an opportunity for you, our customers, to ask questions and probe further. I would like to assure you that Prudential Bank is committed to providing support and the guidance that you need to succeed. I am confident that this event will provide valuable insights and opportunities for growth, and I look forward to seeing the positive impact it will have on your businesses. Thank you very much.
Thank you very much, MD. We are grateful for your welcome. The Cedi, as MD has mentioned, has some challenges and some opportunities for our various businesses. And all we are trying to do today is to see how we'll be able to navigate around the challenges and then take advantage over the opportunities. This morning, it's my pleasure to invite the next speaker, which is in the person of Mr. Cedi Chumakwabwa. He is a business consultant. He was an MBA, and I'm sure several of us have heard him everywhere, on radio, on TV, trying to make us understand what the businesses are doing around this time. Today, we are happy to welcome him to help us understand it and how we can implement it in our businesses. Thank you.
So thank you very much, and good morning to all of you. So MD of Prudential Bank, Executive Management Team, CEOs of businesses that are here, our friends from the media, my colleague, Speaker, Prof. Bokin, is he around? Yes, so I bring you greetings from AGI, and indeed I must commend the management of the bank for organizing this. very important program. We want to educate our companies. Most of you are members, so we are delighted when our members are being supported in different ways. But also to bring up a topical issue in the economy today that has to do with the Cedi appreciation. And I'm happy and honored to be invited to speak on this subject matter. And the theme that I was given is business strategy in a strong Ghana Cedi environment, risk and opportunities. For many years, Ghanaian businesses have planned under the shadow of a volatile Cedi. And as you know, because of the Cedi fluctuations, even when we are pricing our products, we don't only look at the cost of production or the cost of the imports. We look at what the Cedi is going to be in the next 3, 4 to 5 months to price our products today. So the volatility indeed had a big challenge in every decision we took concerning our business, in our cost structures and in our pricing, and sometimes indeed it disrupted competition and disrupted our programs. But today the story is a bit different, isn't it? The Cedi has shown an unusual strength and stability, bringing both relief and concern. And I'll come to the concern. So our task is to recognize the opportunities, acknowledge the risk, and chart strategies that position industry for sustainable growth. So yes, we've complained in the past, and indeed, if you monitor the AGI Business Barometer Survey, which is a survey of business confidence within the economy, and we normally identify the top 5 challenges that are hitting businesses. And in most cases, you see the Cedi depreciation or fluctuation of the currency in the top 5 challenges. So it's been one of the major issues, but today I think the story is a bit different. I know there are questions being asked. Is this sustainable? But we've asked these questions for some months now, and it's still sustainable. So I think we are probably heading towards a certain trend. So if you have complained in the past, today we've had good stability. Do you still have the moral right to complain? We do? Yes. So there are issues. There are still issues, and it's important that we raise these issues. But before I go to the issues, I think it's important to appreciate the gains we are making as a result of the Cedi stability and appreciation. One area that we've seen a significant improvement is lowering of import cost. A typical stronger Cedi lowers the cost of imported inputs. For manufacturers, and I speak more for manufacturing and industry, and even for traders as well, you also gain. So for manufacturers who are importing machinery, spare parts, and raw materials, we are seeing some relief because the amount of Cedi you needed to gather to buy a certain amount of dollar to import a raw material or a machine, you need less of it for the same amount of dollar. So it means that some relief is being experienced. And in a situation like that, operational expenses fall, margins improve, and there's room to retool, expand, and improve your efficiency. So it's an area that we think has been quite helpful. The enhanced stability also informs predictability. When we do our business barometer reports, we calculate what we call the confidence level. And the confidence level is determined by 2 things: how you feel about the business environment currently, and how you project the next quarter the environment is going to be. A combination of the 2 then determines the confidence level. So in a situation where we seem to have some stability. It means our projection and expectation for the next quarter is going to be good. And therefore, if the current situation is good, the next quarter is likely to be good, then the confidence level will go up. And tracing it in the last quarter business barometer, we saw significant improvement in the confidence level. So the stability of the cedi has brought some confidence. The currency volatility also eases inflation and inflation pressures. Businesses can plan ahead and get more confidence and predict more accurately in the next months and inform their pricing and so many things. So that has also been helpful. Again, investor confidence goes up with businesses. Business with Prudential Bank, and you've taken facilities in foreign currency, in dollars and the rest, I think you're having a bit of sigh of relief, isn't it? Because the amount of cedis you needed to pay for the same amount of dollar, you don't need as much because the cedi has appreciated. So those who have contracted loans in foreign currency, you have a bit of relief. In the past, they have been the worst sufferers or losers because of the fluctuation situation. Government of Ghana itself seems to have made some gains. And I quote this from the midterm budget review by the Minister for Finance. He says, Ghana's public debt had declined from 726.7 billion at the end of December 2024 to 613 billion at the end of June 2025, marking an 18% reduction in the debt to GDP ratio from 61.8% to 43.8% in just 6 months. This is a quotation from the Minister of Finance. So clearly, the stability, the appreciation of the cedi has helped to reduce our debt. And I don't think this 18% reduction is due to the fact that Ghana has made some substantial payment in our debt. It's largely because we've made some gains in the cedi appreciation. Again, another area that we need to appreciate is reduction in fuel and transport costs. And we know how this impacts on the economy. Fuel drives a lot of things we do. Anytime the international oil prices goes up, prices of fuel goes up in Ghana. The inflation, if you look at the inflation basket, the way Statistical Service calculates it, the food aspect is key. But another driver of inflation in Ghana is cost of fuel. Because once it happens, everybody buys at a higher price. It increases your cost of doing business, whether logistics, manufacturer, whatever business you are doing, it impacts on it. So then it affects your pricing, and then inflation spirals takes place. So, and I know we've had some reduction even in fuel prices, in spite of the fact that there was a small levy put on it. But we've had some reduction in fuel prices. And these are some of the benefits of the stability. I think we have also experienced improvement. Those of you doing trade within the sub-region and after and other places, I think the stability helps to do more prediction in terms of your pricing, and it helps to enter other markets more confidently. At the household level, I think some gains are also being experienced because you may have increased your purchasing power if prices are coming down. And I think you've seen some reduction in prices, and therefore your purchasing power have gone up and you can buy a lot more goods. So these are all positive development that's associated with the cedi appreciation and the stability in the economy. Now, having mentioned all these benefits, I also need to highlight a few challenges. I stand the risk of being accused that you've mentioned all these positive things and now you are coming to talk about negatives. So which is which? But the negatives are also important and they have impact on the economy. And our role as business analysts, as businesses, as bankers, as policymakers is to look at the situation very well and see how we strategize, such that we maximize the benefit and reduce the negative side so that the net gain will be positive for Ghana. So a few challenges that we've had associated with this. The first major challenge confronting us today regarding the Cedi appreciation is export competitiveness. The stronger Cedi has impacted on exports. And indeed, one of our companies wrote to us. They actually wrote to the Ministry of Finance and copied us and said, if this continues, we may have to close down at some point. And why is it so? It is so because they export to the sub-region and they export to other places. Their cost of production hasn't come down. How many of us have reduced our labor cost? I don't think anybody has reduced the salary of his people because the Cedi has appreciated. So their principal cost of production has remained same. Their inputs are sourced more locally, and the prices have not gone down. So for the same cost of production, they export and they get less Cedis in return. They may get the same amount of foreign currency, but when they convert it, Cedi-wise is smaller. Meanwhile, they are confronted with the same amount of cost of production. So for them, it was affecting their businesses badly. And so many of them encountered this. The second risk, which I see as the most threatening today, is the cheaper import bill that may tempt or is affecting imports in the country. I know some of us are importers, so we are probably laughing. But if you're a producer and you are producing locally and the imports are becoming cheaper, you know what it means. I spoke to one of our members in the rice milling industry, and I was asking how business was going. And I said, but these days, complaints have gone down, so it should be good for you. He said, Mr. Kwabo, you have no idea. We are struggling. And I said, you cannot struggle under this circumstance. I said, no, we are struggling. And the reason is simple. We are getting the same amount of money. Our input cost hasn't gone down. The fertilizer that the farmers are using, the price hasn't gone down. The labor cost hasn't gone down. Our cost of production hasn't gone down. Indeed, electricity cost went up a bit. Now we're talking about more than 15% increment in electricity. I think it was again increased about 2-something%. So if you put it together cumulatively, beginning of the year, we've had about 17-something% increment in electricity. So the cost of production really has not changed. The market is expecting us to reduce our prices because the Cedi has appreciated. Whilst we have managed to maintain prices and in some instances try to reduce it, suddenly there's influx of imports because the imports have become cheaper. And for the consumer, when he goes to the market, rational consumer, you buy products that are relatively cheaper, all things being equal. So suddenly, huge influx of rice, and it's outcompeting them in the marketplace. Just 3 days ago, our beverage and food industry met in our office. And before they met, they had called us of a big concern that they have. And it's happening across these industries. So we invited them to come, and I actually spoke to the Commissioner General, and he acknowledged that they are also aware of this. And what it is that suddenly there's influx. Lots of imports of their beverages, same quality maybe, they are coming from different parts of the world, and the usual suspect countries are dumping it. And it's largely because their cost hasn't gone down that much. It is only when you import raw materials that you may experience some reduction in cost, as I mentioned. But a lot of your cost, if it's local. And some of these companies are sourcing their materials locally. The cost hasn't gone down. Yet the imports are becoming cheaper, and they are flooding the market with it. I know a colleague of mine whose brother is working at the ports, and he's just a shadow officer in one of the custom areas. And he says, oh, every day I was working on about 35 containers. Suddenly it jumped to about 90 within a short period. So clearly it tells you that the imports are coming in, and they are coming in big. What is worse is the fact that some of the imports that are coming in, they are also not coming in through the right routes. They are maneuvering, they are being smuggled through our porous borders, and therefore they are not paying the right duties. So it's making the imports way, way cheaper than the local manufacturing. I'm not in any way against imports. The local manufacturers also import. They import the raw material, they import the machinery. Those who are doing genuine imports, we commend you, you are doing the right work. But there are those that are also maneuvering. But when you put it together, imports are becoming cheaper, and it has effects on the economy if it is not well managed. And we call that the Dutch disease. I know we studied this in economics. Normally, it's referred to more of a resource find. In the history is that the Dutch people found oil in the 1960s, gas in the 1960s. A lot of concentration went there, labor, concentration, technology, everything went there. And then they had so much boost in their economy. The effect is that they left other areas. The Dutch golder, got so much appreciated, like we're experiencing today. And then attention went into that side of the sector of the economy. Eventually, it had a negative effect on local manufacturing. And then it started affecting the economy. So, whilst we appreciate the gains we've made, we must also be mindful of the challenges that is associated with it. The other risk we have is the fact that part of the reason for the appreciation of the cedi today is also because of the international pricing of things. Our gold and cocoa prices have done quite well at the international level. They've contributed to this. Oil prices came down a little bit. Now, tomorrow, if these markets prices change, what is going to happen? Those who have grown and are very dependent on the cedi appreciation will then start having problems. So clearly, we need to think of the future and see how we manage things. The cedi appreciation or strengthening is an indication of some discipline, and it brings in inflows. But let's be mindful of the challenges. I know the one challenge it also has had on us as business people is about public trust. Public trust in the sense that when the cedi started appreciating, there was a lot of pressure on businesses. Reduce prices. Some of us were called by the Minister for Trade to have an engagement with them. We were called by the Parliament Select Committee on Trade and Industry and say, AGI, GUTA, tell your people to reduce prices of goods. So there was a lot of pressure, and the expectations were high. And why not? If you've gained that much, then you must reduce prices. At the time, we told them, our people will reduce the prices, but give them time. Some people have imported products. They are stocked. They have stocks in their factories or stock in their warehouses. They imported at the old prices or old exchange rate. Suddenly, you are asking us to reduce it. Who bears that differential cost? So it doesn't happen overnight. It will take time. Let's allow it. We were called all the time. Have you reduced the prices? If you're unable to reduce the prices, public trust becomes an issue. They think you are being difficult. You are making all the gains. You are not passing the gains to the consumer. So you have, a challenge with your customers. You have a challenge with the consumers. We told them to take their time. Eventually, price would drive down. And I think today we are experiencing it. The fact is that if you don't reduce the price at some point, competition will drive it down. And business people know this. They know this better. They know when to reduce the prices. So eventually we've come to that point where prices are going down. But we must also appreciate one thing, that in some instances, in some businesses, the cost of production hasn't gone down that much. So that expected significant reduction in prices may probably not work in their interest because they would suffer losses. So we have to appreciate it. Eventually it works. Eventually, even if you don't reduce it, others will bring in new goods, new production costs, and then their price will come down. If you continue to maintain your price at high level, lower prices will come and compete you out of the market. You lose market share. So eventually you have no choice. It may mean that you have to absorb some losses in order to stay in business. And business people know, and they will do that. So there's that tendency for public mistrust if you have a situation of this nature. Now, so I've talked about the fact that the Cedi appreciation has given us lots of gains, and I've talked about the challenges that is also associated with it. Now, in a situation like this, what do we do? And I'll have a few prescriptions here. First, at the policy level. I know I'm talking to business people, but the policy level is also very important. I talked about the fact that there's influx, and we experienced this even way before the Cedi appreciation, and today is worse. The fact that there are products coming into the market, and sometimes you wonder how those products could enter the market and be sold at the kind of prices they are being sold. And I always have, a couple of examples. Some of the products are internationally traded commodities. If you take flour. So if you go on the net and you go into the international market, you can have an idea about what the international price is. The cost breakdown of a typical production plant for flour, you can have it. The same thing applies to cables. The copper is sold in international markets. The plastics that is used as insulators, they are also sold. So you have an idea about the cost structure. And yet, goods are able to land in Ghana at a price that is ridiculously low, that is sometimes, you wonder if really they pay the right duties, they declare the right volumes, and they declare the right values. So we've had these challenges. And therefore, in a situation where there's even a higher tendency to maneuver, and it's affecting industries, and we are going to lose jobs, then the regulatory agencies have a major role to play. GRA has a major role to play. And as I said, I mentioned it to someone in high authority, and they said they are aware of the influx. We are not saying put a ban on imports. That's not what we're saying. But let's police the borders properly. Let's have real, genuine business taking place. Let the people who are importing pay the right duties, declare the right volumes, so that the marketplace is fair. On that basis, we compete on the basis of strength and efficiency. It is very important. FDA, GSA, their enforcement mechanism have to be improved significantly. Today in the European Union, when you are sending goods to Europe, they wouldn't say don't bring it, but their quality standards, you must meet it. And they will enforce it, and they will ensure that you actually meet it. They've even introduced new policies and new mechanisms. They have what we call the EUDR, EU Deforestation Program. So it means that if you are sending inputs from Ghana or any country as a supplier of inputs to a manufacturer in Europe, and they do the traceability, and they realize that it's coming from a source that is deforesting or is reducing a forest cover, they will prevent you from sending it. They all have effects. There's another one they have relating to carbon. If you are emitting so much emissions into the system, and your product or input is coming from that source, the European companies are saying, you cannot enter our market with it. So whilst they are protecting their people, it also constitutes a barrier to trade. And they are using it well. So we have no choice than also using the standards to prevent shoddy goods from entering our market so that we can compete fairly. The same thing applies to EPA. And then GITC, Ghana International Trade Commission. That's an institution set up to prevent dumping of goods into the market. They have a major role to play. We've taken a few cases to them, and in some instances we've succeeded, and some countervailing measures have been taken. But it's very important that these institutions play their role well. And again, at the policy level, when it comes to government procurement, and we are happy about the fact that the current government says when it comes to government procurement, we'll give priority, and not just priority, we'll ensure that we procure from locally manufactured products. This is important to us, and indeed, the traders are encouraged to set up businesses in this area. Recently, government has embarked on an effort to procure sanitary parts for schools. And in doing so, they have indicated that they will buy from local sources. One of the major importers came to me and said, I want to benefit from this. I said, well, you're a Ghanaian. And an indigenous Ghanaian producing this, we will give you every support. But if you are importing the finished product, unfortunately, we cannot support you as an association. So rather encourage you to get a plant. It may not be that difficult. It may not be that expensive. Come and see Prudential Bank. I'm sure they could have a facility for you. Set up a small plant and start the production. And we'll make sure that you are part of the arrangement to produce and supply to the schools. But if you are importing finished products, then we have a challenge supporting you, because we are also strongly behind the idea of buying it from local sources, because we can't use taxpayers' money. And it's happening in every country. We can't use taxpayers' money and say we are buying something, we are procuring something for school children. It's taxpayers' money. And then we are buying from imported, finished source. It doesn't help the economy. We need to create jobs in the country. So it is important that all these are taken into account. Government says they are going to review the PPA law. We know we have a margin of preference. It's another discussion that we need to have to make sure that local content is strictly enforced. So at business level, we are all business people here. What do we do in a situation like this? I think those that are exporting, I talked about the challenges that the exporters are facing. You need to also diversify your exports internationally. And then where possible, you also sell some of your products locally. And it enables you to spread your risk. And then you plan ahead such that, but I know eventually the water will find its own level. This situation today, it came in very sharp appreciation of the cedi. When we are able to stabilize it for a long time, you remodel your pricing. And once you factor the new dimensions into it, you have a stable situation. So you may suffer today, but I'll still encourage you to do your exports. Exports are very important because it will help you manage your forest risk. And those of us who are making some gains by benefiting from the lower input cost, we should manage how we spend the gains we've made. This is a time to reinvest in technology, improve product quality, and build stronger systems to become more efficient. In situations like this, if we manage it very well, it will catapult us to another level where we become very competitive in the market. And I think that is very, very important. So let's watch the space and see how we manage our resources so well that the gains we make is not dissipated. Again, I also advise that we look at the supply chains and deepen it. If you are a manufacturer and today you are importing, you've made some gains, don't forget that tomorrow the cedi situation may be different. So deepen the supply chain within country and get as much inputs as possible from local sources. And it will surprise you to know that we have a lot of our big companies that are sourcing their raw materials locally. Nestle produces Cerelac. They get about 80 to 100% of their maize inputs from the north, from Ghana. They've diversified quite well. They have aggregators who are buying these products for them. So they are interested in what happens in the farming, in the villages, and around us. They have interest in that. Guinness is producing cassava beer. ABL is producing cassava beer, and they're using local cassava. Sometimes the sad thing is that Guinness wants sorghum to produce Guinness, and they don't even get enough, and we have to import. So we have a challenge with our supply chains, and I know that the 24-hour economy is looking at it. It's very important that we deepen our supply chains and diversify our sources of inputs so that when volatility happens, we will not be overly and severely affected. Then we look at our pricing policy. I've spoken a lot about the prices, and I believe that when necessary, you must reduce the price. If the gains are beyond a certain, let's share the gains with our customers. And we don't have too much choice, though, as I mentioned. If you delay too much, you'll be competed out. So bear in mind that the consumers are watching. If you are making gains and you are not sharing, others will enter the space, they'll reduce the price and take your place. So pricing policy have to be looked at. Let's also appreciate that there are certain factors that are beyond us as individual businesses. When it comes to the macroeconomic issues, even at association level, sometimes it's difficult. But when we come together as a group, we can influence policy. And I keep saying that working in AGR for so long, I've seen the impacts associations like us have made on the economy and in your businesses. We have a certain policy we call the VAT deferment, or upfront relief of VAT. When the VAT law was done, when you import goods, it didn't make any discrimination. Once you are importing, at the point of clearing, you have to pay the VAT upfront. Then we made a case to Parliament at the time that, listen, for a typical manufacturer, when you import these products, it goes through a process before you sell and get your money back. The VAT, the incidence of the tax on the VAT, is not on you, the manufacturer. It's on the consumer. I'm collecting it on behalf of government. Why are you asking me to pay the VAT before I even go and process? So eventually, government agreed. And today, if you want to enjoy the VAT deferment, you must actually be a member in good standing of AGI. And it was done so for a purpose, because we needed to testify that indeed you're a local manufacturer, because some of the products are also finished products. So associations can make a lot of impact. We engage in all the time. We talk to Bank of Ghana, we engage them. Recently, we were even invited to the Monetary Policy Committee meetings so that we can influence policies at those levels. Individual companies, you may have a difficulty doing that. But when you come together under association, you deal with external factors. So the internal factors, you have the capacity to manage. You can control your labor. You can control your cost. You can be aggressive in the market and get the best out of it. But there are certain factors you don't have control over. And for those factors, you come together, you work with others as a grouping, and then you are able to deal with it. I also advise for the banks. I think the banks have a major role to play in this. And the reality is that the Cedi has appreciated, inflation is coming down, policy rate is dropping, and therefore interest rates must come down. And we have no choice as a bank, and we'll be confronted with this. We met the governor of Bank of Ghana recently, and he told us, people think getting a single-digit interest rate is not possible. But I'm telling you, it's going to happen. So they are bent on doing that. And therefore, banks should also prepare themselves for a situation where we're going to have a single-digit interest rate. I'm only reiterating the point the governor made. It's not my point. He can give that assurance. But the point is that we are getting there. And I hope we get there. Because when we get there, it's going to help borrow money from the system, expand our businesses, create more jobs, and multiply everything in the economy. So it's very important. We are looking to the day where Treasury bill rates will be so down that government will not compete with the private sector at all. Today, it's come down significantly. We are talking of 10-point-something%, isn't it? This is something we've not experienced for a long time. And if it happens to stay so for long, and government actually make effort to reduce its borrowing from the system, it will free money for businesses. What would the banks do? Re-banking then has to be done, because you can't just buy TB rates and sit in your office. I'm sorry. You have to really do business with the business people. Understand their challenges, understand their operations, understand their business cycles, so that you can lend and lend properly. We know that the challenge has always been the fact that our non-performing loans are heavy on us, and it impacts on the interest cost. But let's go into it. When you track it, you notice that a lot of the NPLs, they are connected to government-related transactions. The contractors who do business with government, sometimes they don't get paid early, they don't get paid for a long time, and they have multiplier effect on other sectors. I was speaking to a lawyer friend of mine a few weeks ago, and he said, my friend, if the contractors don't get paid, in the next month or so, I can't even pay my workers. And I said, oh, but do you do business contract with government? He said, no, not me. I've done a lot of transactions for our contractors. If they don't get paid, I'm in trouble. So you see the effect. And therefore, the banks, when we are evaluating this and we are costing our loans, let's take account of the aspect that does not relate to the business itself. Maybe the other businesses are having an effect. We know that you are actually managing depositors' money. It's not your money. So you have a responsibility to take care of the money, grow it, and pay dividends to your shareholders. We appreciate all that. But it's coming to a time where we probably will have no choice than to do real solid banking, which is lending a lot more. Because I'm looking at the statistics. Recently, it was announced that banks' lending portfolio to businesses has gone down. And I think that maybe when Prof comes, he can tell us more about it. But the reality is that at some point, we expect government borrowings to come down, and banks will have a duty to do more re-banking and support our business sector. From the policy side, as an association, we'll continue to press for measures that protect exporters, incentivize industrial production, and prevent unfair and excessive import dependence. Let's look within, and we've been talking to our traders a lot, and we're having alliances. And it will interest you to know that a lot of the manufacturers were once traders. So you work, you create a market, and then you actually go to the next step of trying to manufacture to satisfy your own market. That is more sustainable. So let's work towards that. So ladies and gentlemen, the stability of the Cedi must be translated into broader industrial competitiveness, not temporary relief. The strong Cedi is both a welcome development and a test of our preparedness. It provides breathing space for businesses, but it also sharpens the challenges for exporters. You must see the relief it brings, manage the risks it creates, and most importantly, use this window to build industries that are globally competitive and resilient. The Association of Ghana Industries remains committed to working with government, the bank, the private sector to ensure that the industrial base of Ghana grows stronger, more diversified, and more sustainable in the environment. Thank you very much.
Thank you very much, Mr. Chimakobwa. We are grateful. And I'm sure most of us have picked down the various opportunities as he outlined in his presentation, and then ways we can navigate the challenges. One key thing I noticed from his speech is the fact that the various cost of productions that has come down, there is more to it than just the optics. That's because Cedi has come down, and so we should be able to reduce prices. He's explained why, the fact that some inputs that are sourced in-house are still up, but for us, the consumers, we are still pleading. Let it come down a little for us, because it is when it is friendly for our pockets that we are able to increase our purchasing power. He has also indicated one of the key challenges is the exports competitiveness, the fact that exporters are struggling. And indeed, I'm sure, just as he's mentioned, the various businesses, through their various opportunities and details they get from associations like themselves, and then the quarters as well, the government quarters will be able to help them navigate through some of these challenges. It's the Cedi depreciation, its appreciation has been like a double-edged sword, and so that is one of the key things that he sought to explain to us. I would invite just about 2 or 3 questions for based on the presentation that we had from Mr. Kobwa, and for us to be able to get better understanding of whatever questions we have or whatever further explanation we may require. I would ask that we do just about 2, then we'll have an extended questions and answer version right after the second speaker's presentation. And so I would ask just about 2 questions. I don't know if anybody here has a question, an immediate question for Mr. Chimakwawa before we continue. Thank you. Kindly indicate your name before you.
Hi, my name is Captain Norte. I'm working in the oil and gas industry with the Petroleum Commission. What I didn't hear much about with reference to the city's so-called appreciation is sustainability. The danger, I don't see the danger as whether the city appreciates or depreciates, but whichever direction it goes, it must stay somewhere and it must be sustained. Because today we've had 16 cedis to the dollar. Now we have 10 cedis to the dollar. And if it is not being sustained, next time we are going to have 20 cedis to the dollar. So, well, I know Mr. AGI is not a government, but how is AGI planning to help the government sustain this? I mean, if it's going to be between 10 and 12, let it stay there and stay there for, let's say, the 4 years. Okay, so that businesses can survive it. Because we are only, this is the 8th month. So I don't see it as very positive. Unless it stays this way for 12 months, and then from 15 months, and then 18 months, then the confidence is built up. Then I also didn't hear much about what is the AGI doing with government to reduce the taxes. Because if the city has appreciated, then I commonly believe that the taxes on imported goods should also be reduced. Or for that matter, local productions, the taxations on items that the government is taxing should also reduce so that manufacturers locally can also make some money out of it. Thank you. That's all my question.
Good. So thank you very much. Sustainability of the, I don't want to call it the appreciation, but the stability, sustainability of the stability. As for the appreciation, you may not continue to appreciate, but what you want is the stability of it. The truth of the matter is that the global economy has impacted a bit on this, but we also acknowledge the effort by government, reducing expenditure, managing a few things differently, and then we get in here. But the long-term sustainability requires some fundamental changes in the structure of our economy. As long as we are highly import dependent, when you go to our shops and you have over 70%, 80% of the products you are consuming being imported, you are always at the mercy of the international market prices. So for us as an association, what we always preach is that what do we do to reduce our import volumes? Today, we seem to be doing well, but sustainability will depend very much on government's own management of things going forward, the international, prices of commodities which we don't have control, but then we making efforts that during this period of stability, we consolidate it by doing more of our production locally, creating jobs and expanding our value chains, and then working towards exports. When we do this, then we can be quite sure of reasonable stability. Because if you continue to import, you're always bringing pressure on your currency, and you are at the mercy of the international prices. Anything that happens, sometimes we don't have control. What happened in the Ukraine-Russia war is always been cited. Recent developments, once in a while there will be, some development in the international world and you don't have control over it. So it makes stability a bit challenging. But those are external factors which the country itself doesn't have control. But the things we have control, let's do it well. Let's get more of our manufacturing products locally, work with industry, work with agriculture. Let's link the two properly, and I'm sure we'll get the stability we need. The second question of taxes being reduced has been one of our advocacy points all this while. We thought that the taxes in Ghana have gotten to the point where it is becoming a counterproductive. Our neighboring country, Nigeria here, VAT is about 7.5% or so. Ghana, we are doing 21.9, almost 22%. So if they produce, and under the ECOWAS and AFCAT arrangement, you can actually import duty-free, quota-free. So some of the goods that are coming, they come from those sources. And you just cannot do much about it. Because if their cost of production is lower, the tendency is that they can outcompete you in the market. And the cost of production, taxes is a key part of it. So we think that a review of the taxes will help. We've made significant input into the budget last year, and then even the midterm budget review. And I'm aware that when it comes to the VAT, for example, it's under review. We are expecting a few engagements along the line. The final figure, we have no idea. How it's going to be structured, we have no idea. But the government has promised, and I think if you follow the midterm budget, the Minister for Finance said we are going to take out the COVID levy, the NHIL, and some aspects of the VAT. The worst part of the VAT system we have today, which I think is also part of your concern, is the fact that there's a certain 6% which you cannot recover. And VAT is supposed to be a kind of a tax system that the incidence is not on you, the business person. You are collecting it on behalf of government. But when you pay, they say you can only collect 15%. The other 6% is on you. So it becomes a levy. So the whole structure has to change. And taxes are important. Government needs taxes to develop the country. But where it's becoming counterproductive, then it has to be looked at. For the manufacturer, there are aspects of the tax that we've complained about because we think that normally shift the taxes to more of post-production than pre-production. Pre-production affects your cost, it affects your price, it affects your market share. But if you shift it to post-production, it makes a big difference. And I can give you countless examples. I don't want to go too much into it, otherwise we spend all the time. Thank you.
Thank you very much, Mr. Kwabwa. So, as I mentioned, we have an extended version of the questions and answers, which will be after Professor Bokpin's presentation. And so we would zoom right in, so we'll be able to work on time. We are going to have just about maximum 10 minutes break for coffee. And as soon as we come back, Prof will be ready for us to start his presentation. Then we can continue with the questions and answers before we go. But the coffee session is at the restaurant. So we get out, we descend just once, and then on the left side, we'll be able to do that. And please, we are doing just 10 minutes. So we'll be able to come back. As I mentioned earlier, it's being streamed live on GTV, and it's being streamed live on our various social media handles. And so I'll be grateful if we can work within the time so we'll be able to have a successful program. Thank you very much. Again, we are still exploring the opportunities and challenges around it. But this time, we want to look at the drivers of the appreciation and the opportunities again that comes with it. And to help us do that, I'm introducing our next presenter. He's in the person of Professor Bokpin. He's an economist and a professor of finance at University of Ghana Business School. We know him, I'm sure, one way or the other. We've all heard his voice on radio, on TV, everywhere. I would let him continue, but we know the extensive work he's done with government. He has over 15 years of experience in practical industry, governmental and bilateral engagement. There are several projects from World Bank through IMF, wherever, that he's been part of. And so we couldn't have been in a better hands to understand what we need to know about the appreciation of the city, how we're going to navigate around, what is driving it, and how we're going to take advantage over the opportunities around it. And so thank you, Prof, your audience.
Thank you. Good morning, everyone. MD, good morning, board members, and the media, good morning, everyone. I consider this a privilege to be here, and I want to thank the bank for inviting me, and also somebody who mentored me at some stage in my life, Mr. Ebokwesin. He's almost like a brother to me. Thank you very much. So, of course, I stand on the existing protocols. There's someone I respect so much. I was thinking that I will do my presentation before he will come, because when it comes to the experience, he's got it all. So, Seth, thank you so much. I think you've covered my slides without showing you my slides, and thank you very much. I lean on his presentation because typically I haven't worked in an industry before. The longest I've worked in an industry has been 3 days. I went to work on Monday, Tuesday, Wednesday, and I felt I don't belong here. So I left, and I've been in academia. So a bit of the things I would say may sound a bit theoretical, but forgive me. This is what I've been exposed to all this while. And of course, and again, I'm not a politician. In Ghana, if you're in politics, you want power. When you get the power, you want to use the power to make money and then business. Now we've noticed that they want titles in addition. So G-Tech has been working hard and, and all of that. So thank you very much. So the presentation is going to be on the Cedi appreciation. I mean, the question is, why should we be concerned when the Cedi suddenly appreciates? I'm sure what people are saying is the same Cedi we are talking about, isn't it? It's not like a new currency altogether and all of that. So we'll look at a bit of introduction, and then we'll look at the economy. The most effective way to ensure the stability of your currency is to manage your economy well, right? Is to manage your economy well. And that is why we say in economics, if you are in doubt how well the economy is doing, look at the exchange rate, right? So it means that whatever happens to the exchange rate, we should be able to trace it to the economy and the fundamentals of the economy. If we can trace the aggressive strengthening of the currency to the fundamentals of the economy, that there's structural transformation, there's productivity transformation, the economy is growing, we are creating jobs and all of that, then we can say, guys, it's time to relax. The Cedi has arrived. Or let me put it this way, Cedi na peke, okay, to quote our finance minister and all of that. But let me also say this. It is never the case, and it should not be the case, that as a country, we pursue exchange rate as an end in itself. No, it's a means to an end. So wherever we want the exchange rate to be, the question we need to ask ourselves is whether it is leading us to where we want to get to. Right? So at the end of the day, the position of your exchange rate or your exchange rate management is also a reflection of your economic philosophy, the economic orientation we want to have. For some countries, they may choose to weaken their currency because by so doing, it promotes the kind of economy they want. Others have even abandoned their currency altogether. They don't have a currency of their own. We can talk about the Panama and the others. They said we don't need to go through the struggle of currency. They've abandoned it altogether. We can also talk about the Francophone countries, right, where their currency is pegged to the euro or the eurozone and the rest of them. So the important question we need to ask ourselves is, what do we want? What economy do we want to create? And therefore, how do we position the exchange rate to make it happen? I think that should be the most important thing. Over the years, what we have observed is that we are too fixated on exchange rate. We are too fixated on exchange rate, as though it's an end in itself. And I think that we need to move away from that. Bear in mind, this currency that has strengthened year to date, according to Bank of Ghana's data, by 40.7% or so, this currency, we just celebrated the 60th anniversary. It was introduced July 1965. If you look at the value that was assigned to this Cedi when it was introduced in July 1965, and you compare its value today, and you look at the depreciation, the Cedi had depreciated by 99.999%. This same currency we are talking about. 99.999% is almost 100%. The reason we are not talking about 100% is that mathematically, when you depreciate something by 100%, it ceases to exist. Okay. So we end it at 99.999%. But fast forward, do you remember 2007? We did redenomination of our currency. Typically, we say in mathematics, we count in thousands, but we chose to delete 4 zeros. We will not go into the technicalities of that. When we were done and we started trading, the Cedi was trading higher than $1. It was 0.98 to $1 Now we are talking about 10 point something or even 12. So if you do the variance decomposition analysis from July 2007 to date, the value that was assigned to the new Cedi, more than 80% of that value has been wiped out. Okay? Over time. So what it means is that assuming you manage a bank or even a business, if you don't actively grow your capital, the depreciation alone is enough to render your business worthless, through no fault of yours. I'm sure it's the reason why others will propose that, look, this Cedi has worried us enough. Let's abandon it altogether. I hope you understand that. Let's adopt the dollar and then forget about this. Okay, of course, other countries don't have a currency of their own, but they've managed the economy. But if we are able to manage our affairs very well, it should be possible for us to have a stable currency for the foreseeable future. And I'm talking about stable currency, which is not the same as fixed currency. In economics, we talk about price stability, which is not the same as same price. Prices are stable if the change in price is not so wide so as to distort economic decisions. We say prices are still stable, and that is what we should be looking at. Within that context, colleagues, within that context, what we have seen this year, we cannot say that is stability. Okay, you cannot look at a currency that has strengthened by almost 40% within 6 months and say this is what? Stability, right? It looks all more like a disruption, but of course, that in itself will bring advantages. Okay, so in monetary policy management, there are trade-offs. Okay, so you want to manage in such a way that it doesn't cause dislocations in some aspect of the economy, and at the end of the day, the kind of economy that we want going forward. Okay, so this is Ghana's population. It's also good for the Cedi, right? So currently we are talking about 32.4 million or so people. Of course, some people added to the number last night and all of that. But fast forward, by 2040, Ghana will be 45 million. Okay, there will be 45 million people. Guess the characteristic of that population. 30% of that population, they will be less than 30 years. What would they be looking for? Jobs. They will be looking for jobs. These are people who would have finished free senior high school, quantity-driven, less quality. They would have entered the labor market looking for what? Jobs that probably exist in the textbook. So the economic orientation should inform what kind of policy we put in place. The World Bank is telling us that between 2012 and 2023, this economy has only added on net basis 250,000 jobs. Can you imagine? 2012 to 2023. Meanwhile, the labor force, people who have entered the labor market, we are talking about 2.7 million Ghanaians who have entered the labor market within this period when the economy has only delivered 250,000 jobs. You can't, as a leader, you can't look at this data and sleep soundly. If you're able to, there's something wrong with us. Okay, so what it means is that a higher percentage, probably, look, for some people, their portion will be unemployment, even if they majored in employment in the university. Yeah, that will be their portion. Okay, so the days when we celebrated jobless growth, they are over. We should be pushing for job-rich growth. And I'm sure my big boss, Mr. Seth, would have spoken about what the implication this will mean for import, right? So we need to create an economy that is able to create decent jobs, especially in the formal wage economy. That is what should inform the kind of policy. If that meant that the Cedi would have to depreciate, let's say, by 10% or so, and that will help us get there, so be it. So be it. And I'm sure when we get there, and then we create that kind of economy, the Cedi will be a bit stable. Will be a bit stable. Because the depreciation, if we had put our house in order, the depreciation itself will confer some advantages on us. Okay? Because if your currency strengthens aggressively like the way we have seen, typically it will also make tourist visit more expensive. And we may be losing out in terms of using tourism or tourist visit in strengthening our economy. So we need to look at the trade-offs and see where the benefits weighs heavily on that. So that is the projection. So if you see the numbers, between now and 2030, 712,000 people will be added to our population every year. I'm sure majority of us sitting here, they are waiting to go and give birth. Good news, population is numbers. Okay, if we can add value, transform that, then we can benefit from the population demographics. This is a little bit of projection, where the future lies. See, by 1980, there was no African in the top 15. 2000, no African in the top 15 or so. 2022, you can see again the data. But 2050, we'll see Nigeria showing up. We'll see Egypt in there. By 2075, I don't know where you will be. Wherever you will be, Nigeria will be in the top 5. So if you look at the growth potential, okay, and the rest of them, a small country like Ghana, we need to take along, put our house in order. Probably we can benefit from that. I hope you understand that. So that is how we should be seeing it going forward. So in terms of the stability and all of that, our macro framework is expressed beautifully, driven by fiscal and monetary policies. The aim is to achieve low inflation. Don't tell me inflation of 12.1% is low. It's not. Okay, we seem to be celebrating inflation of 12.1% simply because we have performed badly in the past. Okay, given where inflation was in December 2022, 54.1%, if it's come down to 12.1%, it looks like we should clap for ourselves. But come to think of it, that you manage in an economy where between July last year and July this year, prices on the average have gone up by what? 12.1%. Still very high compared to world average. If you compare that to Nigeria, you compare that to Kenya and the Cote d'Ivoire, and you compare that to Kenya and the rest, you can see that it's still what? Very high. So there's still room for improvement, and we should be looking at a single digit for the consistency. We've been there before. Actually, December 2019, Ghana's inflation was 7.9%. Just December 2019. Then COVID came, and everybody disappeared. We did not only declare COVID lockdown, we locked down our economy totally. And since then, others have not recovered, actually. And for some people, what COVID has done and the stress, it is only death that will resolve the matter for them. It will not be any of this. You mark it on the wall. I'm not cursing anybody. So what I'm saying is that before development will reach some people, I hope you understand that. And please, let's not celebrate average growth. Growth of 4.75% is too small to lift millions of people out of poverty. Time is not on our side, colleagues. As we speak right now, 26% of Ghana's population, they are in extreme poverty. Okay? And if you look at our consumption pattern, it's just the top 1% who consume more than 48%. People just put things in their mouth. They are not eating. Okay? They are not eating. Okay? So when we talk about data, data is life. Behind the data, we are talking about human what? Lives. Okay, people have finished University of Ghana 8 years, 10 years. They haven't found a decent job. You can't say it's their fault. That is not their fault. Okay? And going forward, we should be tracking employment generation. We should be intentional about creating jobs for the youth. Because, look, you can decide to postpone marriage. You can disengage after engagement. You can postpone childbirth through family planning. Of course, others haven't seen that. Okay? But how long can you postpone hunger? So many people go to bed not being sure where their next meal will come from. There's a certain level of corruption and stealing that is life support. You understand that? Because for some people, that is just the only way they can survive. And I think we should not put ourselves through this. At the end of policy prescription, at the center of policy prescription, it should be about people. So when we say our economy is recovering, the policy makers must be telling us how many people we have lifted out of poverty. How many decent jobs have we created? And how is that showing in social security and the rest of them? People go on pensions and they don't know whether to fast or so. Look, people fast in the universities not because they love the Lord. They are fasting to balance their budget. Fast forward. So low inflation, low unemployment. Let's go work at it. Let's put in place policies. Look, and before Ghana wins, politicians must be willing to lose so that businesses will be able to gain. You can't have power and have money and business at the same time. It doesn't exist. So we have to decide. You want the power, okay. When you get it, let's use the power to promote what? Businesses. The state, if the state exists solely to collect taxes, the state failed. The state failed. And if the state conceptualizes itself as a tax state solely, then we'll probably look at tax as a hammer and treat everything else as a nail. We just want the money. And by the time we realize, we'll drive businesses underground. That is what we should be looking at. I'm sure you are familiar with this. If we were doing this presentation in the 70s and early 80s, there wouldn't have been any need for you to choose between Ghana and Malaysia, Ghana and Singapore, Ghana and South Korea. Because per GDP per capita, we're almost at the same level. Today, see the gap. Ghana is the blue line. We are still on the runway. The plane is full. It doesn't matter. We are missing our connecting flight. We are still on the runway. See, others are in the air. They are moving. Branding. If you go to the IMF website, this is the picture you find about Ghana on the IMF website. If you are Ghanaian, you should feel sorry for this. What does this show you? This is chaos, disorder. Of all this country, all the beautiful sites, is that all they can find about Ghana to represent us? By inference, this tells you something. We won independence from UK the same year. Look at the picture they have about Malaysia on their website. Ghana joined the IMF September 20th, 1957. We've been there 17 times. In fact, actually, the IMF is telling us we have been there 18 times. We are saying that we have been there 17 times. They are saying that we've been there 18 times. Okay, this is what they have on their website. Hello, I'm just saying this so that I want something to provoke us. So that from here we ask ourselves, what shall we do? How do we get out of this? Because we should be able to come out of this. Of course, Malaysia has never been to the IMF before. I don't want to blame the IMF, but you see, South Korea, they've also been to the IMF 17 times. You see the picture IMF has about South Korea on their website. Decency, organized, developed. You see Singapore, see what they have there. You saw what they have about Ghana. This is the next slide. These are not people's date of birth. These are dates Ghana went to the IMF and the date we left. Like this. We are currently under an IMF. The current program will end just December 2025. The next question is what next? In terms of transformation, effective leadership. You will hear that these days economists in Africa talk about leadership much more than motivational speakers, right? Because everything rises and falls with what? A good leader will put in place the right governance structures, good governance, and that will lead to economic development. But it doesn't end there. It should lead to development must be people-focused. So we can't say Ghana's economy is doing well when millions of Ghanaians are in extreme poverty. People can't find jobs. Inequality is widening and all of that. We can't say that. It must also preserve our planet Earth. We can't say our economy is recovering when we are causing so much distraction to what? Our environment. Bear this in mind. I'm not prophesying, so I don't need to send anything to anybody. Is that okay? This is not prophecy. Whatever stability we are talking about today, because we are exporting gold and the rest, 10, 15 years to come, it will look so infinitesimal in the face of the catastrophic environmental destruction that awaits us. I don't want to say very soon you should start importing water. You understand that? Please, there can never be economic sustainability without ecological sustainability. They are linked. And when we talk about welfare in economics, it's not just about money. For some people, what brings them joy is that they see the environment preserved. And it's good for you and I. Life was designed to be supported by that ecosystem. We can't undo that. I'll skip some of the slides, but I'll share them with you so that I'm sure some of these will help you appreciate why we are in academia and all of that. Okay, so I can skip this. So low inflation. See Ghana's inflation over time. You can see the countries we compared ourselves to. Malaysia, you can see inflation has been quite low consistently. So what we should be aiming at, and I'm sure those are the concerns you also have, how do we build resilience on this stability? How can we ensure low inflation for so long? Because we've seen low inflation before, but it doesn't persist. Okay, with the slightest shocks, everything goes. So see Ghana's inflation. That looks like a child who is learning how to write. This is an organized performance of a nation on payroll. Then we talk about an economy. I'm sure Mr. Seth spoke about taxation. You know, you can only talk about tax when you are growing a taxable economy. Okay? Because it's not every aspect of GDP and its redistribution that is taxable. But Ghana is not growing a taxable economy. So, and yet we want that economy to deliver higher what? Taxes. If that is what you want, then it means that you are going to burden the faithful few. Because you are not growing a taxable economy. You are not, everywhere you go, it's just, so see the banking industry, highly taxed. This is the data, right? So pick agriculture. Agriculture, its contribution to GDP, now we are talking around 17, 18%, or 19%. Its tax contribution is less than 1%. Can you imagine? Okay, that huge sector. Because we've left agriculture to peasant farmers and the rest of them. But fast forward, Ivory Coast, agriculture contributes just 17%. Look at the tax contribution from there, 10%. Because they are into commercial plantation. I hope you understand that. So there's business to farming. So because of that, they are also getting the tax what? Revenue. So that is why people who live along the borders, they wake up in Ghana and go and take breakfast in Cote d'Ivoire and come back. Because food inflation is very low. Okay, and for the records, things are very expensive in Ghana, especially food. And especially if you want to eat as a human being. Proper vegetables and the rest of them, those ones are very expensive. But if it's about junk, even that one it is. For the records, I was trying to explain to somebody that what we say 3 squared meal a day is eating 9 rounds. 3 squared mathematically is what? It's 9. So when we talk about a human being taking 3 squared meal a day, it means that your breakfast, you should have starter, main, and dessert breakfast. So you check whether you've been fulfilling this call. And then your lunch should also have what? Starter, main, and then what? Dessert. By the time you're done with lunch, you've done 6. Then your supper should also have what? Starter, main, and dessert. Then you fulfill the 3 squared meal a day. And I'm urging all of you to fulfill this because the end result of production is consumption. 24-hour economy will only work when people are also consuming. I hope you understand that. Because if they produce and nobody is what? So when you sleep for 8 hours, wake up midnight, some people will be pounding fufu on the last shift. And some people must equally what? Eat that as well. But all of this is just to tell us that there's some kind of urgency. And if we all do all of this well, you will see the Cedi will explain itself. Then pick the financial sector, your contribution to GDP, just about 5%. Look at your tax contribution, 23%. So you see that sector is highly what? Taxed. So then come to mining. You can see the mining, the tax contribution is also high. Even though we've seen uptake in gold export, it has not impacted our revenue. From year to date, government is telling us that they have exported $5 billion worth of gold. That's not spendable money. Optimally, we will benefit from the FX, but it's not impacting our revenue envelope aggressively the way it should. You know why? Simply because we are exporting raw gold. If you export raw gold and you are lucky, your maximum profit will be 5%. But if you process the gold, your minimum profit will be 10%. So if we believe that we want to transform this economy, and we are talking about 24-hour economy and transformation, we should take bold decision and say that, look, our gold, maybe 60% will be processed here. That is the only way we can develop. That is where the job creation can come. Since independence, we have not changed the structure of our economy. In fact, the colonial economy handed over to us on the handing over note is what we are still practicing. Those people took time to design that economy. Because after 68 years, we are still, that's what we are doing. Actually, it's a failure on us, also as intellectuals, with all that we have learned. and with all that we know, we have not been able to use this to transform what? Our economy. Because the understanding is that development is knowledge intensive. So where have we come from in all these cycles? Okay, all this while. 1st July, which was a Republic Day. Typically, we use it to surrender to the IMF again. Okay, so the current program, the call was made on 1st July, and that cycle has taken us all the way up to here, and that's why now we can talk about some stability and all of that, because it was that call to the IMF that also occasioned the debt restructuring. So the debt restructuring has played a key role in the stability or what we are seeing right now, because we are not servicing our debt like the way we would have, so that is conserving FX, and then there's also fiscal space that has been created. The domestic debt exchange alone, the fiscal savings government made from restructuring the domestic debt was 61 billion cedis. So the hair people lost, when we aggregate it, it comes up to 61 billion Ghana cedis in fiscal savings. From the external, we saved more than $5 billion and all of that. That has created some kind of space. Are we out of the woods yet? No. When you see that growth is erratic, it can go up, it can come down, it tells you that you have not attained what? Stability. So we need to put the fundamentals in place in such a way that growth will be steady. And in order for Ghana to come out of this trouble, Ghana must grow at not less than 9.5% consistently for the next 15 years. We should be growing at double digits so that growth can reach the guy on the street. Development can reach the guy in the village. Otherwise, it is death that will solve their problem for them. That's the point. When China wanted to come out of there, you see the rate at which they were what? Growing. We need to be growing. So the question we need to ask ourselves is, what do we need to put in place so that we can grow at that rate? So that in the next 15 years, I'm talking about 15 years because to move from macroeconomic stability to economic transformation, you will need not less than 15 years. 15 years of doing the right thing and the consistency. In this country, sometimes we have the privilege of doing the right thing, let's say for the first 2 years, and after that, what do? And then we start again, and then we take those steps, what? Back. So sometimes we are running so fast just to stay where we have. Okay, and I think that is just the point that we want to make. So what has happened with what we have here, I'm fast forwarding, 2024 election has played a role in this stability, if we want to call it that way. The regime change and the honeymoon effect and all of that. The president boldly declared the 4 priority areas: economic restoration, accountability, and fight against corruption. We wish them well over here. Okay, and then also improving business environment, government and constitutional reforms, and all of that. Based on that, they presented their 2025 budget. Okay, the targets are a bit moderate and all of that. They removed some tax handles and all of that, but they still increase revenue and all of that. Okay, so that's very important. But this is where the starting point is. So the aggressive strengthening of the currency is not accidental. Okay, we can talk about global factors and all of that, but from the fiscal point, that was the lever. That was the main driver. What happened? For the first time in our history, in fact, actually, if you look at the data from 1992, this is the first time that aggressively we have actually cut expenditure. Okay? And I have looked at the data. So if you look at 2017, the 2017 total expenditure over 2016 went up by 32%. Okay, so that was what it. But in this administration, they actually reduced expenditure in nominal terms in excess of 10 billion cedis. Then look at what they did in addition to that reduction. They said that half year they were going to spend 128 billion Ghana cedis. They actually ended up spending 9.7 billion. So what it means is that government is not injecting liquidity into the market like the way they would have. What it also means is that because they are not spending as much as they should, they are not borrowing as much as they would have done in the market. So in 2025, government decided to reduce their gross financing needs from 61.4 billion Ghana cedis in 2024 to just around 44 billion Ghana cedis. Even with that, they are not taking all of that deficit from the markets. Okay, so that is why you see treasury bill rate has come down. So they chose at some point to sweep balances from state-owned enterprises rather than accepting auction in the money market. Okay, so that has also contributed to it. And because they are also not spending as much as they should. We said they are not spending, they said they are spending. Of course, government will spend baseline, right, and the rest of them. But government is not spending appropriately in the area of infrastructure. I hope you understand that. So whilst we agree with them that that is the way to go in 2025, because the economy was overheated, we need to cool down economy. We cannot do this going what? Going forward. So my expectation is that from 2027, government will begin to progressively what? Spend or increase its development spending. And they must do so and spend wisely. Okay, spend wisely. So if you see these allocations, right, and all of that, even though it has come down, the sacrifice in all this spending cut and fiscal discipline is actually capex. It's capex. So when government say they are spending, we agree that they are spending, but government is on track when it comes to social spending. I hope that's okay. Social spending has to do with spending on education, spending on health, and then social protection. I hope that's okay. But when it comes to infrastructure and the rest of them, we are not. Of course, we need to recalibrate that before and all of that. And of course, they are also not paying contractors. Oh, here, let's gossip. There are some contractors, they will get their money probably when their next government comes to power. You know, this is Ghana, right? And all of that. So that was just by the way. Please don't record that. Okay. To move forward, let's look at other interesting things. See other expenditure, 33.6 billion Ghana cedis. This other expenditure essentially is to cater for the inefficiencies of our state-owned enterprises. Why should the taxpayer bear this? I hope you understand that. ECG and the rest of them. So I think we need to just look at restructuring our state-owned enterprise and make them more efficient. I don't know where we learned this our democracy from, where we've come to believe that democracy means cost. Democracy is more than cost. It's about delivering value. So if you check Ghana's history from 1992 to date, what has expanded has been administrative cost. So the administrative cost has expanded so much that the tax revenue is no longer enough to sustain that and make some available for development spending. So come to think of this, we send a bill to Parliament. We want to create an authority to administer scholarships. Guys, scholarship authority. So we're going to have Director General for scholarship, Deputy Director General for scholarship. Hello, we don't need to go that way. You know why? We already have Get Fund. I hope that's okay. So probably it's interesting. For you know, Get Fund will do all the application, approve the number of people they want to give scholarship to. Then the list must go to, let's say, scholarship secretary for them to issue the letters. So we should be looking at cutting what? Because you will not run your business this way. Will you do that? No, you will not. Like you will not be sitting here. Okay, so we have to adopt a lean approach to implementing our democracy. Then we can free up space for growth-enhancing spending. Otherwise, we'll be here. Just make a mistake and say you are going to Kumasi right now. You may arrive tomorrow morning. You understand that? I mean, the distance between Accra and Kumasi is not 251 kilometers or so. The distance between Shanghai and Beijing is what? Here is 1,000-something. They're able to do it in 2 hours. Between Accra and Kumasi, it may take you 6 hours. Hello, 45% of economic activity is movement. Okay, so we can't talk about economic transformation when we don't have basic infrastructure. Okay, to connect businesses, factors of production, and the rest of them. You can't talk about that. Go and check on the IMF's Quality Infrastructure Index. Ghana is not in the top 10. We've been talking for a long time. The data is not confirming that. We are not that competitive. The IMF's Quality Infrastructure Index, they use the mean speed score to measure the mean speed between intercities. Okay? Côte d'Ivoire is in the top 10. Ghana is not in the top 10. We are not in the top 15. We are not in the top 20. We are not in the top 30. We are number 36. Our score is just around 56. Intercity. So if all that you can do between intercity is 56, that is inefficiency. That is what? Inefficiency. And that is why our food inflation, more than 30% of that is as a result of transportation, lack of connectivity. If this country cares about the citizens, you will not allow what we are seeing on the Nsawon-Pokwasi Road to exist for 1 week. Can you imagine the amount of dust people are inhaling every day? If they cannot vote properly, should we care some people? People are inhaling mountains. People have mountains in their head. walking around, the wear and tear to people's vehicles. Look at what people go through every day just to put food on the table. Why should a country take their citizens through that? Ghana's road is in people's stomach and in their houses. This infrastructure we are talking about, the 33 billion Ghana cedis, colleagues, it's not for fresh roads. Cost overruns. Cost overruns. Okay, you today want to be patient. Okay, so fast forward, we've seen debt sustainability also playing a role. So the fiscal strategy government adopted has helped. So when you see fiscal discipline, shrunk expenditure, discipline, control, and all of that, it gives leverage to the central bank to also deploy their monetary policy effectively in bringing down inflation and then engineer what? Growth. So that's what they've done. So the Bank of Ghana saw this clearly. They moved in, increased their sterilization by also mopping up excess liquidity. Then the supply side is on their side, right? So with minimal injection in the market, what happens to the value of the cedi? Okay, so we've seen what has happened there. So from the fiscal side, yes, there's a link, okay, and they are intentional about it, okay, and the coordination that we have also seen in here. And then, so if you see the 2025 budget, even though there were excesses with the 2024 election and all of that, government essentially used the 2025 budget to correct all of that. Okay, so we agree that that is the way to go, but going forward, we need to recalibrate and begin to spend progressively and efficiently in order to enhance growth so that we can deliver on the job agenda and the rest of them. I think that's what we need to do. That way, we can go past this projection. This projection induced by the IMF and the rest is too insufficient to take us to where we are going. We've seen first quarter growth and all of that. Actually, first quarter growth has been strong, but it's very difficult to say the first quarter growth is simply as a result of the new government measures. I hope that's okay, because the budget was approved just even in March. I hope it takes a while before and all of that. So government would now have to spend, because if we are not careful and we go on this path of austerity for long, it will begin to hurt growth aggressively and then job creation. So we need to manage that delicate balance going forward. That's what we need to do. We knew that from where inflation was, there were two things we needed to do. You either tackle that from supply side or you tackle that from demand side. Typically, inflation in economics, we say that when aggregate demand exceeds aggregate supply, the difference is what we call inflation. So you either solve it from the demand perspective or you solve it from the supply end. So if Ghana were to make progress, then the way out would be pursue supply-oriented policies that would enhance the productive capacity of the economy. But we can't do that because we don't have the fiscal space. So we chose the other way around. Mop up excess what? Liquidity. So that the more money chasing fewer goods, what happens? Take it out of the system. So in the last 30 years or so, if you notice our monetary policy, we pay people on monthly basis just to mop up what? Excess liquidity. But please, do we need the liquidity to sit with Bank of Ghana or with businesses? With businesses. Okay. But the reason we are doing this is that the economy's productive sector is severely restricted. So because of that, we are uncomfortable to allow more money to be in the what? In the system, because that will cause what? Inflation. And once we are mopping it up, we are actually denying private sector capital for them to what? To expand. So we go in circles and all of that. Okay, so we need to do that. So clearly, from the demand side, they moved in aggressively. At some point, we suspected that targeted exchange rate was going on, because if they're able to drive the inflation to, let's say, 11 or so, it will help our exchange rate to 11 or so. It will help the inflation to come down significantly to single digit by the first quarter of next year. And that is essentially what they were doing. So we've seen the aggressive strengthening of the currency, pushing inflation from 23.8% December 2024 to currently 12.1%. Producer price inflation is less than 4%, we are told, and all of that. So we can say that this is something we can take away from that as well, because low inflation is desirable in itself for planning. It's desirable. So the most important thing is, how do we what? Sustain this for the next 5-10 years. Because for businesses, they are not planning for 1 week. They are not planning for just 6 months. Others are planning for 5 years, 10 years, and all of that. So this is the horizon that is important. Whilst we've seen inflation decelerate sharply and process of disinflation entrenched, we are not seeing the macro variables aligning well. That tells you there's something wrong with the system. Look at this. So you can see where inflation is down here. I hope that's okay. And then see where the monetary policy rate is. That has failed to track downwards. And then see where the Ghana reference rate is. So Cedi strengthened aggressively. And then everybody was calling on importers and everybody to reduce their prices, right? The first person to have reduced their price should have been Bank of Ghana. Because the policy rate is also a price. I hope that's okay. It's also what? So if we felt that things have improved and prices need to come down, then somebody has to also show leadership. So if we are asking importers to pass on the gains to consumers of goods and services, then we should be passing on aggressively the gain also to consumers of credit. And the way we pass on the gains to consumers of credit is through lower what? Interest rate. And then we increase the longevity of the tenure. This is what we call enabling environment. Enabling environment cannot be an interest rate that is 27% on the average or 23%. That interest rate does not support business. Does not. The kind of interest rate we have, it can only deliver the economy we have. I hope you understand that. Yeah. It's the interest rate that can fund import and not production or manufacturing. And that is what we need to what? Align. So we saw that the last pricing window from the central bank, they reduced the policy rate from 28% to 25%. We think that the gap is still very wide. So even if you benchmark your policy rate against core inflation, which is less than 13%, then the gap between 13% and 25% is too what? Is too wide. That represents inefficiency. So that is cost in the system that we need to be able to what? Address going forward. And then we align those rates. We've seen the treasury bill rate come down significantly and all the other money market rate, but we've seen policy rate. Because policy rate has not come down significantly, the policy rate has also, the Ghana reference rate has also not what? Come down significantly. Colleagues, if we are talking about enabling environment and we are talking about interest rate, then our interest rate should not be more than 8%. And the maturity tenure should be more than 12 years. This is what we call enabling what? Environment. So if businesses can borrow at 8% with a maturity of, let's say, 12 years, it means that before the repayment, they can actually what? Turn it around several times. Because we are not an island. People, I will show you some slides very soon. In Kenya, businesses are borrowing at less than 10%. I'm sure you are aware. Cote d'Ivoire. Here, averagely, we are doing 23%. There's no way we can be competitive. I hope that's okay. We have not even accounted for taxes and all of that. So if you see the cost base, there's a certain cost base that is state-sponsored, which the efficiency or otherwise of individual firms cannot correct that. I don't know whether you get the point I'm trying to make. Okay? So there's a certain cost base to doing business that being efficient cannot what? Resolve that. We need a state to do the right thing and lead in that area. That is the only way we can make businesses more efficient. Okay? Then back to the Cedi. So we've seen the Cedi and all of that. See, this is the volatility we've been talking about over the years. We see a bit of correction with the strengthening of the Cedi. We were comfortable with some level of appreciation, but we felt that the pace was too what? Aggressive. We could have paced it over a period so that people gradually what? Adjust. When it's that sudden, it causes disruptions. Okay? And that can leave negatives and positives along the way. So that is, I believe, that the point that we needed to make. And in all of this, stability is to be treasured over these wide swings. Okay? And the rest of them. So that is what we should be looking at. In our analysis, we think that, I don't know whether I should say, we think that the exchange rate should be between 12.5 and 13.5. Is that okay? Thereabouts, okay, so that we crowd in. That's very important. Because otherwise, the way some economic agents will react may be different. I hope that's okay. And all of that. And if we check the Forest Bureau and the rest of them, we see it a bit more closer. I hope that's okay, to that end than the former financial system and all of that. Otherwise, the way people will react, especially we've heard that remittances has gone down by almost what? 50% or so, and all that. So come to think about it this way, people go through a lot to earn foreign currency abroad. And if they bring it here and it's priced that low, I hope you understand that, they will decide. And when they decide like this, it's not just the reduction. What it means that projects are going to be put on hold. I hope you understand that. Interventions that they were doing, that was also cushioning the economy and all of that, everything is going to what? Put on hold. So we should be looking, that's why I said that, let's not pursue an exchange rate as an end in itself, but we should be looking at how that can lead us to the kind of economy that we want to have going forward and all of that. Okay? So, of course, other countries that don't export gold and destroy their environment like we have done have equally been able to achieve relative stability. There was some kind of strengthening at some point, and then they stabilized it. In the case of Kenya, they chose to stabilize it at a much early stage compared to Ghana. So you can see Kenya, I hope you understand that, they saw the right one. They saw a bit of appreciation. I hope that's okay. But they decided to what? Stabilize it. But in Ghana, we allow hours to come, I hope you understand that, before we think about what? Stabilizing and all of that. But I think, of course, I also commend Bank of Ghana for the way they have also managed it, because at the end of the day, it's also helped inflation to what? To come down. Our debt numbers are more sustainable. But like we always say, there are always trade-offs. What will make some people laugh will make some people what? But at the end of the day, the most important thing is what kind of economy do we want? If we want to build the competitiveness of our indigenous private sector for people to produce here, then I think we need to take another look. Okay, and I'm sure the central bank government will be looking at all of this also going forward. Yeah, so interest rates in Kenya, I compared that to that of Ghana. Then again, the other thing to bear in mind is that our market is not efficient. Colleagues, our market is not efficient. If you look at the spread between the deposit offer rate, average weighted, and then the lending rate, Ghana's one is very high. I hope that's okay. So whilst the average in Kenya may be like 6% or so, in Ghana it's more than 12%. And I think that is something that we have to take another look, so that we are able to pass on the gains to the economic agent as quickly as possible. So what factors have driven this Cedi? We can talk about the fiscal strategy. You can't take that away from the Minister of Finance. And I believe that there's leadership there. So if you look at this expenditure cut I spoke about, there are trade-offs. So I'm sure that without the backing of the president, there's no way the Minister of Finance will have that boldness to what? To cut expenditure like the way they have done and all of that. So there's leadership on the table and all of that. And as I also indicated, whilst we agree that baseline this year, we need to do this, we must begin to what? Progressively spend and increase our development spending and spend wisely in that area. Then there's also the gold board factor, export earnings that has increased. In terms of our exchange, then there's also confidence, cocoa earnings, there's a goodwill, and then honeymoon effect. Is that okay? It looks like for some people, the change was more of a dividend for them. I hope you understand, like, and all of that. So the regime change has also contributed. And then, of course, we are also seeing one of the long-lasting honeymoon of a leader right now. Is that okay? So we need to leverage on that and do more than that. There's a bit of a change here now in terms of the way we manage our exchange rate. Bank of Ghana is a dominant player now in the system because they have access to FX. And depending on how they spill that onto the market, they are able to influence the price. Okay, when it happens that way, we are moving away from more market-based system to a more dominant, and that will distort price. Okay, one of the important functions that the market plays is price discovery. So meaning that where there are forces of demand and supply, in economics, when we say forces of demand and supply, these are not witches or wizards. Okay, when you lift the veil, you're going to see how many buyers, how many sellers, and all of that. But that is what I think is happening in the market here. If we continue like this and we don't recalibrate that, we are likely to see a parallel market strengthening. It's okay, where the official rate will be within the financial system, but the transaction rate will be over the counter And I think we don't need to go back to that. Remember what we call forest bureaus today. In the 70s and 80s, they were black markets. Okay, so what we call forest bureaus today were the black markets of the 70s and 80s. As part of IMF World Bank reforms, we decided to formally absorb the black market into the formal financial system, and we chose to clothe them with the concept of forest bureaus, so that we'll be able to do away with what? Black markets. Okay, so, but if you don't look at the pricing regime very well and all of that, we only give oxygen to the black market. I think we should look at it from that perspective. Okay, so I was talking about the debt restructuring, both domestic debt, external debt, and all of that, which are all playing a role here in terms of the savings from the Eurobond and all of that, program financing. But whilst all of these have ensured a certain platform for the government to take over, again, leaning heavily on the 17th IMF-supported program, there is also risk there that we should bear in mind. I'm saying risk now so that government will look at how they can de-risk this particular outlook going forward. Because the current IMF-supported program is ending technically December 2025. Data tells us that anytime we are under the IMF, the way we behave is different. And when we exit, the way we behave is what? Is different. I take note of the fact that the president had indicated that we will not go for another ECF, a funded fund support program, but probably they are looking at policy support instrument and all of that. That looks more advisory and all of that. But I also take note of the measures government is putting in place so that we are able to impose that level of fiscal discipline on ourselves without calling on the headmaster to come in here and check our homework. So government is talking about, they've revised or amended the Public Financial Management Act. They are talking about an independent fiscal council that would act as an internal fiscal restraint agency, similar to what the IMF would have done. But the question is whether we will respect it and whether we will be bound by whatever their findings and all of that. So those are the risks that we need to manage. My expectation is that the 2026 budget should offer alternative pathways for businesses to plan with, so that we know what is it that we are putting in place and all of that. We clear key performance indicators, the necessary structural reforms, productivity-enhancing reforms, fiscal reforms that will help us sustain this stability and build resilience. There's a difference between stability and resilience. You have stability, you build resilience based on that, so that when there are shocks, you can what? Withstand them. And let's also bear in mind that macroeconomic stability is not the end. It's only a means to what? An end. And if you check the data, colleagues, since 1992, Ghana has been moving between macroeconomic stability and crisis. Okay, we achieve relative macroeconomic stability through prudent fiscal policy, sensible monetary policy, and then either commodity shocks or election or something, and then we have to, and the cost of correcting that is becoming too much for us, which has also taken out the form of debt restructuring and all of that. Okay, the energy sector risk is another thing to bear in mind, okay, and all of that. Government has announced their bold policy, 24-hour economy, okay, decentralized into 8 integrated sub-teams, Grow 24. If you leave the Vale, you will see traces of planting for food and jobs. Did you get it? Grow 24, agriculture for economic transformation. I believe in that. Is that okay? I believe in that. The pathway to our economic transformation, we should be looking at agriculture, agribusiness, and agro-processing. In that value chain, huge. Okay, and in fact, Ghana could just focus on that. Okay, under the AFCFTA, and we may be enough. Because Africa's net food import in 2015 was more than $35 billion. By the end of this year, Africa would have spent more than $115 billion in net food import. Okay, so we can develop a strategy based on this. Of course, we are not going to fight with Senegal over who has birthright over jollof rice. But if you taste Ghana's jollof rice, you will know this is the original. You understand? You will know this is the original. Okay, so we can target the food value chain, because we've got the infrastructure to be able to do that. So can you imagine Ghana decides that in the next 5 years, we are going to reduce Africa's food import by 10%. That would translate to billions of what? Dollars. And by so doing, we also have enough food to what? To eat. And the job creation potential in that area, the inequality reducing effect and poverty reduction effect is huge. The income multiplier, the employment multiplier is very high in the agricultural sector. If you look at Ghana's social accounting metrics, the way to develop, we know. We have to just say we are going this way, and that's the only way. And Africa could actually feed the rest of the world. I'm sure you are aware. This is a continent that has almost 60% of the world's unused arable land. And the two longest and the two largest rivers in the whole world are in Africa, conducive for agriculture. Okay? The only thing that will help us to understand this is that we have decided not to act. That's why a tropical country like Ghana would import tomatoes from a desert country like where? Burkina Faso or Onion. We were told in economics that this comparative advantage is a tropical country. But I see what the literature people are teaching us now, that comparative advantage is not a game changer. Comparative advantage may be endowed, but people are creating competitive advantage. Competitive advantage is created. Okay? And that is what we should be looking at. That way, we may be able to solve a lot of this. So, in terms of this, Grow 24, Make 24 in terms of industrialization, value addition. Then there's also Build 24. Everything has 24 in it. Okay, so Build 24, which is about construction and the built environment. There is also Show 24, which is the creative industry. There is Connect 24, Fund 24. This is what the problem is. How is it going to be funded? And I'm sure they will be coming to the banks and the rest of them. There is also Aspire 24, and then Go 24. Mainstream the 24-hour program, and then mobilizing Ghanaians behind it. And that is what I'm doing right now, is to mobilize all of you behind the 24-hour economy. Okay, so which sectors will benefit from these priority areas? I'm sure some of you cut across that. Okay, if we're able to do this consistently, then it means that our city will be stable. Agro-processing, agribusiness, agro-processing. This is huge. Okay, and businesses that are in this sector are likely to make it big time. Remember that Africa is one of the continents that eat a lot. Okay, so food has market. Demand is steady for the next 50 years, okay? Because Africa spends 44% of our household expenditure on food. It's not like we eat too much. I hope you understand that. It's because salaries are small. And then also, as we are all sitting here, you are like Liverpool. You never walk alone. You don't sleep alone. Your salary, so many people make legitimate claims. Okay, who didn't show up at work with you? I hope you understand that. So you don't cook for one person, okay? You don't cook for one person. This is who we are. We are communal. That is why a lot of people don't believe in insurance policy, because the family network in itself is a form of insurance. I hope you understand that. Okay. And all of that. Okay. And then, have you seen this sector? The apparel sector. In 2022, 2023, it brought more than $2 billion on the average. Is that okay? So this sector is also picking up for banking and the rest of them. Of course, people like wearing it these days because you don't need to wash it often. Okay, and it's still okay. Okay. I spoke about construction and infrastructure. It's huge. Okay, we need this sector to pick up. Even though these days it's a bit capital intensive, once there's considerable spending in that area, a lot of people would also get jobs in that area. There are some people, they don't need to work in an air-conditioned environment. They were brought up to lift mortar. I hope you understand that. So as they are lifting mortar, the construction and the rest of them, there are others who are also cooking beans for them. You know, at the end of the day, everybody is what? Is sorted, and then we are done. Somebody, if you see him, he can lift you and your wife together, and you'll be fine. Okay, so we need all of them in the system. Okay. Education is also going to receive priority. Retail and digital finance, you know, the biggest financial service provider today is not a bank, but it's MTN. I hope that's okay. Momo and the rest of them. So we need to look at that. Digitization also has a cross-cutting intervention. Mining, quarrying, we expect that. But we need to do responsible mining. Yeah, and then hospitality and tourism would also receive a boost going forward. Then there's also wellness and fitness industry, right? I mean, because of the rise in the middle class and all of that, this sector is also what? Picking up gradually. You can see these metals. Others are just looking at it. Some people are actually lifting them and all of that, using it to strengthen their health. And people are eating healthy and the rest of them. So in terms of the outlook, it will not be politically expedient that we allow reversal in the appreciation this year or something. Okay, so we have enough reserves to ensure stability, okay, all the way to towards the end of next year and all of that. But I think that if you have reserves, the prudence is not to use it immediately. What we should be aiming at is to build reserves that allow the city to be what? Stable for the foreseeable future. What is important is predictability. So when people are doing their budget for the next 1 year or 2 years or so, there's a kind of predictability that they can work with and all of that. Whilst we say so, we also agree that the aggressive strengthening has brought some stability. It has also helped us in fast-tracking our debt sustainability. In fact, the IMF had projected that we will reach debt sustainability by 2028. We are likely to do this 2 years ahead. Is that okay? Because of also the aggressive strengthening of the currency. If you value our external debt in Cedi terms, it's lower now because the Cedi has what? Strengthened and all of that. If we had the market open, then probably we could decide to pay off some of our external debt at this low exchange rate, but we may not have that leverage now. There's also lower inflation, dwindling interest rate, but it has also impacted negatively government revenue envelope, especially from the ports and the rest of them. Okay. Businesses have also faced increased uncertainty because this was sudden. So you can imagine a lot of businesses have done their strategy session, approved their budget before January started. Then somewhere March ending or so, I hope you understand that. You saw this, it's more like a disruption and all of that. That uncertainty is difficult to cope with. What this is likely to do to us is to create an uncompetitive domestic private sector, okay, because it will make import what? Cheaper, and possibly smuggling may happen and all of that. And all of this can also undermine our ability to what? Produce. Remember, we can never build a job-rich economy if we allow all kind of influx. I hope that's okay. Even if it's cheap and all of that, we should be looking at the medium to the long-term implication of allowing that. And then again, we should be concerned because of the implication for export competitiveness, especially, and also the influx of cheap import, maybe from our neighbors or so, and all of that. So those are the things that we need to look at. So in summary, exchange rate is not an end in itself. We should be looking at what is it that works for us so that it doesn't cause disruptions and uncertainty. There are too many uncertainty people are dealing with already and all of that. But I think that we can't also blame government totally. The approach that they've adopted in terms of from the fiscal side and all of that, and also the complementarity we are seeing from the central bank and all of that. But the only thing is that when it's that sudden and aggressive, it's very difficult to cope with and all of that. And then again, if it's also about the currency that historically is very strong, if people have the impression that it's priced so cheap, chances are that it will not crowd in FX. It will rather crowd it out. And that way, it will have its own implications. And I'm sure if people have raised concerns about the fact that it's difficult getting FX, even when it's in the account and all of that, I think we need to oil that in anticipation of. So things will pick up because from next year, government will begin to spend progressively. Import will pick up and all of that. And therefore, we are likely to see how this would also impact on the currency and all of that. In terms of the horizon, I think government will have to outline and de-risk beyond 2025, what is the strategy so that businesses can also plug into that. So thank you very much for your attention.
Thank you very much, Prof. We are grateful and I'm sure each and every one of us today would attest to the fact that we've picked a line or two that would help us in the operation of our businesses. We have come to the presentation side of the program. So far, we were welcomed by our managing director, and then Mr. Chumakwaba came in to let us know the opportunities that we have in the industry or the strategies that we can adopt to be able to have some benefits from the current situation or the current Cedi appreciation side. And then Mr. Professor Bobkin has also come in to let us see, well, we've seen the drivers of the Cedi appreciation and then the opportunities that has come, the various sectors that we can play in order to have some benefit or enjoy the benefits that the Cedi appreciation has brought to us. Again, we have done with the presentation side. We're going to go into the questions and answers where we seek to listen to some of the questions that you have for Prof, for him to be able to respond to us, to deepen the understanding of what we've gone through today. Thank you. So I'll make the mic available for those of us who have questions for him.
Thank you, Prof, for the insightful presentation. I'm a bit of worry, and I know many Ghanaians are worried that for this long while of the stabilized Cedi against the dollar, our local commodities have not seen any much adjustment to commensurate the current situation. I have even seen some of the things being prices going up. For example, a place, a kinky at a particular place has rather gone up. The price of the kinky has rather gone up, or there's a change from what the size that we normally see. Do you sincerely think that as up to this point, those doing the businesses can't appreciate what is happening and let prices reflect the stable nature of the Cedi against the dollar? Thank you.
Okay, thank you very much. So baseline, in economics, we say that prices on the average are upwardly flexible and downwardly sticky. Nobody has been able to undo this. Okay, so when things are going up, it's more flexible. But when things have to what? Come down, it's very sticky. Okay, and that is, and it's sticky also because it may not be that sudden. It may not be that sudden. So the way economic agents respond and all of that, that is why we felt from the beginning when we saw this aggressive trading that, guys, let's slow down. Because this may not manifest explicitly in a corresponding reduction in what? In prices the way you would have expected it, because prices are downwardly sticky and all of that. But we can also see that with the aggressive strengthening, we've seen how inflation has what? Has tracked down significantly, okay? Even though when you see inflation come down to, let's say, 12.1%, it doesn't mean prices are coming down. That's not what it means. It means that prices are increasing, but at a much slower what? Rate. So prices are still going up. So when you go out there and you see that the price of kinky has gone up or the size has shrunk a bit, okay, it doesn't mean that it's going counter to what we are saying. What it is that prices are increasing now, but the rate of increase is what? Slower than before. Sometimes too, you can interpret this to mean the longevity. So if probably it takes like every 3 weeks before price will change, now it has what? Lengthened. And that is why at some point in Zimbabwe, when inflation was in the thousands, it looks as though they should stop measuring it. What it means is that in less than 3 seconds, price will change. So you could be in a queue going to buy something, and whilst you are in the queue, the price at which the person ahead of you will buy it will be different from the price at which the next person. Or you could buy something, and if you didn't take the change and you went back, they will ask you to top up or they will collect the item. Okay, so the stability, it helps you to plan. And I think that there are some advantages we are all enjoying now because people can still go to the market with the budget that they planned with, let's say, a month ago. Okay, unlike what we were hearing in 2022, especially when there was a run on what? The Cedi. But human nature as we are, when we are talking about reducing prices, our default position is not to do it the way we should. And also remember that exchange rate is just one variable among many variables that people have to deal with and all of that. But what we also needed was just to give ourselves some time. Because before this will trickle down and all, it will take a little while. But politicians don't have time. I hope you understand that. We want quick results. So Cedi has appreciated by 40%. It means that prices should also this. But at least it has helped the inflation to come down. So the rate of increase has slowed significantly, which is also good. If you look at the data from the producer price index or inflation, you can see that has also come down. But what is not too good for now, it didn't just start now. Actually, from November 2023 and also before, we've realized that inflation on imported items is lower than inflation on locally produced items. I think it confirms what Mr. Akwabwa was saying. So what it means is that if you're an entrepreneur and you rather import and put a local logo on it, it will be cheaper than actually producing here. And that is why, at the end of the day, if you look at the aggressive strengthening in the mix of all of it, then you want to be careful. What kind of economy do we want to build? Is it one that builds the competitiveness of our productive sector here? And that is what we should be doing. Otherwise, the 24-hour economy, grow, make, and all of that, it will come to what? It will come to nothing if it's so expensive to assemble the production here compared to what importing. For the records, what the people we call entrepreneurs, they are not entrepreneurs. Entrepreneurship in Ghana or mostly in Africa means identify some item abroad. I hope that's okay. Import it here, put a huge margin on it, and then you are an entrepreneur. You are taking awards. This is not entrepreneurship. This is not entrepreneurship. In our culture, what we call entrepreneurship, people make with their hands. Then in a market day, what do? They come and what? So we cannot outsource the productive aspect of our economy to a foreign country and expect to make it. It's just like someone who is sleeping as though he's competing with the dead, and yet he wants to make it in the land of the living. Okay, as somebody says, it doesn't work that way. It doesn't work that way. We have to enhance, and that is where labor will get job and the rest of them. So it will take a while, but I also admit that we've had a certain kind of fundamental that allows us to build on and plan. It's caused some dislocations. We need to look at the right balance. But I think from the fiscal side and all of that, they've started so well. But the issue is, how do we build on this? And as they navigate this phase of moving from pure austerity to progressive spending and the efficiency along that value chain, that is where the game changer will be.
Thank you. Thank you very much, Prof. Please, any more questions? Any more questions? Can do just about 2 questions in addition, then we go on. Okay, looks like we had fantastic lectures. So we have, in addition to good students, which has made us understood very well the lectures that we had today, as well as the messages we had from the other speakers. So we are about drawing down the curtain. The next on my program will be a closing remark from our executive head, retail and commercial. Again, our last request for a question. If not, now I'll invite our executive head in the person of Mr. Ebokwesin to give us. Okay, just before you come in, somebody else raised their hand up there. Charles.
Thank you. Prof, almost always job vacancy figures are always different from sources that we hear from, especially depending on who is speaking. As a country, what can we do to ensure that we streamline this figure? Because if you hear politicians, the figure is different. You hear academics, the figure is different. You hear from international sources, the figure is different. So how do we streamline and get the actual figures on this? Thank you.
All right, thank you. if politicians mention employment they have created, well, there are ways that we can fact check that to see whether it is correct. Okay, you can check with SNIT because it should show up, the numbers. You can also check with the database of GRE, and then there's also Ghana Statistical Service and all of that. There is also the ILO database, but that one is more conservative because the way they define employment or unemployment is a bit different. So we also have Ghana Statistical Service that collects the data and all of that. So there are ways that we can track and fast check, and you will notice that politicians mention these figures, but they actually don't get away with it because at the end of the day, they are unable to what? Prove it and all of that. If you talk to the captains of industry, they will tell you whether they are what? Recruiting or not. Bank of Ghana also, as part of their monetary policy, they've been collecting data on job adverts, based on adverts, okay, online, and then also the print. So there's also way of tracking that. So at the end of the day, there are ways of validating that. Sometimes academics also, we also use our own estimates and all of that and have an idea of what is happening and all of that. The likes of Professor Bambuatin, he's well known when it comes to labor economics and employment. But that is the reality. You yourself, you can also interact with people and you can see what people are also going through. Some people are getting jobs, but it's just at the very top. Then also the employment that we are talking about here, it's not everybody you meet in traffic that is going to work. Is that okay? That is going to work properly. That's not. Okay, some people are just, you'll be amazed. Okay. So almost 70% of those who even said they are in employment, they are in what we call vulnerable. You go to the shops and the rest of them, the beautiful ladies and the people you see there, they actually don't have employment contract. And health insurance and all of that. Okay, so what it means is that with the slightest shocks, all those people will be what? Will be laid off. You'll be amazed. So now, the true implication of what we are talking about is what we call labor devaluation, where people, the kind of qualification they have and the kind of job they should be doing, they are actually not getting that to what? To do. So they have masters, but they've lowered themselves. I hope you understand that. To actually do jobs that GSS, BEC holders should be what? Doing. That is where we are now. Okay, so you have people with 2 masters, and the job they are doing, SS holders should be able to what? Do it. But people are okay to say, okay, let me just accept it like that. I hope you understand that. Because I'm not getting the job that matches my what? My qualification. Okay, so the surplus labor is leading to labor devaluation. And you yourself, if you check the hours you commit to work and the salary you take, I'm not saying you should show me your salary. You check and see. I hope you understand that. So people are having to give in more for far what? Less. And when it happens that way, you don't have bargaining power. Because if you complain, they will show you the what? The exit, because there's a queue. So when you try to leave and see the queue, say, no, please, I'll do it. Okay, so all of this doesn't help us. And then because of that, the economy itself is not benefiting. Let me end this way. There are 2 types of people who eat in this world. There are those who ask the price before they order. We need less of those people. I hope you understand that. And then we need those who sit down and they are served. Those who ask the price, they are American, and then their hand is in their pocket. I'm not talking from experience. I hope you understand that. So, because for all that he's got is maybe 10 CDs. I hope you understand that. And so, watching, you shall say free 8 CDs. I say, oh, sir. Okay, they mami 8 CDs. And okay, more namo and namno from say okay, mami shito. I hope you understand. All right, so this group would have eaten. It will never impact our revenue envelope. Then the second group, we need more of that. That's why the state should not be afraid when the citizens are doing well. I hope you understand that. They are making money and they are enjoying their lives. That's how the state also benefit. So the second group are the ones who sit down and they are served. They sit down and then they bring some longest. They call it menu. Say, please don't worry. What do you have? They will take starter. I hope you understand that. What do you have for starter? Instead, oh, we have this. Okay, bring it. What do you have for this? And then when they are done, they are the ones who will say, bring my bill. When they bring, you will see VAT on it. I hope you understand that. Yeah, VAT on it. You see this. So 2 people have eaten. One's own is taken notice by Ministry of Finance. And then the other one, I hope you understand that. There is no VAT on it. There's nothing. They are the ones who don't give tips. Okay? And they will also take their change. They say, please, I can't one person. I hope you understand. But the second group, we need more of that. In fact, it's the reason why we promote holidays and festivals. In Africa, when we say people should go on holiday, they are going to give birth. Okay, 9 months later, it's outdooring. That's not what we are talking about here. Holiday, you go somewhere with your family. I hope you understand that. You save like 10,000, you go to North, you go and blow it. I hope you understand that. Then you come back. Okay, that is how the economy can grow. I hope you understand that. When people are not spending, the economy will not what? Grow. We need to empower people to be able to what? Look, there's a certain level of humility in the system that is not God-given. It's poverty-induced. I hope you understand. Okay, so we need to release people so that people can be themselves. Spend. Pick colleagues out for lunch, spend. Okay, first funeral, you go, you spend. Beer, people buy one beer and 3 people share it. No. Okay, people buy beer, take small in the afternoon, then they leave the rest. I'm not talking from experience. I don't take beer. But this is just by the way. Thank you.
Okay,
Thank you.
That will be our last question.
Yes, thank you very much. And thank you, Prof. Bobkin. As a business person, traveling around a bit, my worry has been the ease with which the black market, the Forex Bureau, are able to conjure the USD for us. And the rumors that the banks are in cohort with the allergies. Prof, you cannot go to Singapore, India, Asia, Europe, US, and be carrying USD and get them to clamor for it from any forex. You have to produce your passport, you have to produce your IDs, you have to fill some declaration forms, just as you do with the forex at the airport and so on. But the case is totally different in our country. And I've always been wondering, what is your prescription or advice to the central bank? Is it that our leaders don't travel outside? Is it that they don't visit these places? Is it that they don't know that these things are not being done elsewhere, but in our country, we do it with cheeky ease? And so everybody is rushing to go and change the USD. I can just sit in my office, call my allergy, call my Forex guy, and no matter the amount I want, in the next 1 hour, without asking for any documentation, I have it on my desk to transact whatever I want. I need an answer. Thank you.
Okay, so I'll just make an attempt. Yeah. So, baseline, if we're able to find the rate, this problem may be solved to some extent. When there's a perceived bias in the pricing, then you are creating a parallel market. So, at some point, we see an interaction between the formal financial system and then the what? The other para. Even those who use the financial system, chances are that they will withdraw their FX, I hope that's okay, from the formal financial system and head where? To over the counter. It's also because of the para pricing. So one way is to look at the exchange rate. If we position it where people think it's supposed to be, it will crowd in the FX rather than what? Crowding it. So people will be comfortable to use. Right now, the divergence between the interbank retail rate and the Forex Bureau is more than 25%. Yeah. You know, then that is a problem. So it means that a decent seeing this prefer to go and change his FX where? Because as he making money, laugh held constant. Okay. Our predisposition is to maximize my utility. So the country must love itself enough and put in place the right measures and all of that. But the bigger issue is that whether we like it or not, our economy is largely dollarized. Largely dollarized. And we are so exposed to exchange rates. I hope you understand that. Volatility, that what you see going around is people's own risk management strategies they have put in place. This is risk management. So you go to certain institutions, they price in USD. But they will tell you that they are not taking the USD, but they are taking the Cedi . It's a risk management strategy. So they are fast forwarding. They are passing the volatility to the consumer rather than who? The business. So there are risk management strategies that we have adopted that is working out. But a good way to eliminate the black market is not so difficult. Any country that is corrupt, you can never eliminate black market. Because the black market provides an interface between the underground economy or the bedroom economy, I hope that's okay, and then the official economy. In 2022, people thought our economy was going to collapse. The way we were going. In fact, there were the foreigners who thought that, hey, I said, hold on, you don't know the economy you are talking about. Our real economy is on the ground. I hope you understand that. Our real economy is on the ground. So for instance, corruption. Baseline, the money will pass through the former financial system, but it doesn't stay there. I'm sure you are aware. So it passes through that, and what do? They withdraw it. When they withdraw it, they are not comfortable keeping the money in the financial system. I hope you understand that. Where would they keep it? Maybe somewhere else. In which currency would they keep it? When the Cedi, because currency performs 4 basic functions, a medium of exchange, the Cedi is doing that very well. A store of value, the Cedi have failed. I hope you understand that. A unit of account, the Cedi is not doing well. So if of all the functions of currency, the Cedi is performing only one of them very well, and the store of value and the others is not performing well, people will do what we are doing. If I'm a rich person and I denominate my wealth in Cedis, no, it will not be a wise strategy. And that is why at some point in Ghana, demand for safe. You know safe? We run out of safes in this country. Safes, we run out of safes. People were importing customized safe. Only angels can lift it from their room or their house. Okay. So that's what we are doing. So the allergies and all of them we are talking about, they are well connected. You think the powerful people don't know them? Across the 2 main political divide. Who writes a check to finance a political activity? It's physical what? Cash. And nobody will keep their wealth in Cedis. It's not only here. More than 60% of Africa's high net worth individuals don't keep their money on the continent here. They make the money here, and then they quickly what? Yeah, even right now in Ghana, the upper middle class and the other, they are externalizing their wealth. Okay? And when you see that, it means that we will not grow. We need to make the money here, and we need to ensure that the money what? Stays here, so that it stays within the financial system. The banks have the money, they can what? They can lend. But when you see the system where people make the money, they take it out, and then what do? They keep it. The essence of money is circularity. Money is supposed to go around. So there's a way we can do. If people believe that the Cedi is going to be stable because we are managing the economy well, and this is also the other bit. The people don't want to sweat for money these days. They normally want to walk along the corridors of power. I hope you understand that. Structure some deal somewhere, and then quickly they make what? A lifetime money. And those money, because they didn't make it the right way, they are uncomfortable keeping it within the financial what? System. They will withdraw it, and normally they will look at the currency that is safe, and it's the USD. Okay, and we ourselves have no incentive in addressing this because all of us are participants in that market. From the very top, don't ask me for evidence. I hope that's okay. As an academic, I'm allowed to make an intelligent guess. I hope you understand that. Yeah, from the very top to the least, I hope you understand that this market is a cushion, and therefore nobody would want to what? Take drastic measures to and some of the currency you see in the black market, where it came from, I hope you understand that. You can really see, I'm not saying that that's what has happened, but these effects that you see passing here and there, yeah, this is what is oiling the economy and the corruption. Yeah. Okay, thank you.
Thank you very much, Prof. Thank you very much. I'm going to invite Mr. Ebokwesi, the Executive Head for Retail and Commercial Affairs. Our closing remarks. Thank you.
Good afternoon, and thank you very much for joining us today at this Cedi Appreciation Seminar. I'm getting a lot of messages on my phone. People are happy with the two speakers we brought. Seth started the tone very well. He showed us how AGI is engaging GRA, Bank of Ghana, to get to influence policy as far as taxes and setting monetary policy right. He also spoke about the fact that appreciation is good, but we need to get to the point where there's stability, because we need stability to plan over a horizon, and some of the things that AGI is doing to get that thing right. Then, of course, we just heard from Prof. Bokwin, who made finance look like ABC. A lot of jokes, but a lot of sense and practicality in the presentation. He spoke about the fact that if government is doing a policy, it needs to look at the people side of it. The fact that the policy will bring peace, and also looking at ensuring that the environment is also in the right place, especially when you look at what is being done with Galamsey. The fact that we need to grow at about 9.5% if we need to get to where Singapore, South Korea, India, and the rest are. Quite a number of things have been said. MD also spoke about why we were here and why the bank thinks this thing was important. And then my colleague Zibrim also talked about the various products that we have, the trade cards and the Pan-African payment system, etc. In summary, let me say that we are happy we had this session. Look out in this space for more of such activities from the bank. But the summary of it, I'll take a quote from Thomas Edison, who is an American inventor and a businessman. He said, genius is 1% inspiration, 99% perspiration. That's sweat. So it's good that we have all these policies, all this nice talk. But that's the 1% of it. The 99% of it is the commitment, the hard work to get it done. Thank you very much, and we are happy to have seen you here.
Thank you. Thank you very much, Ebokwesi. And all too soon, we've come to the end of the program. Two quick announcements. We'll have groups photos with our esteemed customers and then management. And then from there, we'll head towards the restaurant area for our lunch before we go. The networking continues there. It's a buffet whilst we try to reach. Let's speak to our fellow participants and know what they do and how we can partner with them to improve on our business. So I'll kindly call on first management with the facilitators to take the picture, and then the rest of them will join all of us. Join so we take a very big group picture before we go. Thank you.
لو كان يفتدى
Thank you. Please, everyone can join us, so we'll take a very good one. Thank you. Can you, everybody? Thank you.